You could say that would drive demand for equity markets in Asia, because it might lead to an expectation of further action from the PBOC, but that doesn't seem to be the vibe that particularly has been filtering through. S&P futures are pretty flat, as you can see. The Bloomberg Dollar Index is just moving a touch to the upside this morning. We are waiting for Jerome Powell to speak once again, but he spoke yesterday, didn't say very much or anything that really would have moved policy. This is the Brent price. We're at $80. We actually dipped down into a 70 handle just yesterday. Quite a substantial move downwards, but we'll wait to see where we go next on oil. Tom.
Futures looking marginally brighter. The DAX is pointing up by about 0.1%. The FTSE 100 futures pointing to 7,415, just a gain of 1 point.
Okay, so waiting for perhaps a little bit of upside at the start of the European trading day, maybe some downside at the start of the US day, but really quite muted, really quite range-bound. There's volatility in treasury markets. We were talking about that a little at the end of the last hour with Mark, and is that more important to stocks is one of the stories that's been written on the Bloomberg terminal, and a question worth asking to our guests. But this is what we have at the start of the European trading day then. The FTSE 100 up by 0.3%. I mentioned what we were seeing in the dollar, absolutely nothing, essentially. The dollar is flat today, the pound flat, the euro flat, also the Swiss franc. I didn't need to read all those. The grey column would have told me enough. Sovereign bonds, then, quite a mixed picture. The London gilt market just opening up, and we see some buying there at the short end, the yield coming down just a touch, in contrast perhaps to what we're seeing over in Germany. But some really muted upside at the start of trade here in Europe. Tom, what do you see on sectors?
On a sector-by-sector basis, 4 of the major sectors in the green so far in the session. Industrials posting gains of about 0.5%. You're seeing utilities up 0.8 as well. Autos posting a gain so far, just in the first few seconds, of course, of the Thursday open. The tech sector is down by 0.4. Consumer products taking a bit of a breather as well after some gains of the last few days, down 0.2%. Energy, interesting again. You've got Brent still around that $80 a barrel level. Currently, as a sector, down 0.4%. Across your European benchmark, then, so far this Thursday, you are flat to very, very marginally positive.
Okay, flat to marginally positive. Sam Unstead joins us from the Markets Today blog to talk us through some of the stories that are on the blog today. It is quite quiet, isn't it, in terms of macro themes to trade around? Although, having said that, there is one coming out of China. Tom referenced it earlier, the back to deflation story out of China. I mean, there was a time where we used to talk about, China as the workshop of so many products globally that they used to export deflation. I mean, maybe we could do with a bit of that. Hasn't worked up to now.
No, it hasn't, and I think so. We talked earlier this week about some Chinese data on the trade data, and kind of said that there was something in that for everybody to take. There's something for the bulls, something for the bears, but nothing's particularly major on either side of that. Today does look a little bit weaker, but it's sort of the same story again, kind of coming back round. You'll get a little piece of China data that looks relatively weak, though not really drastically so, and then now we're into this phase where we're going to be looking for what kind of stimulus may come.
Yeah.
And I think that's the phase we've now
I do
moved
think
back
it
into
also,
again.
to some extent, challenges that view by Ken Griffin, who was speaking to us at the New Economy Forum, saying that inflation is going to be higher for longer. Well, if you have 1.4 billion people living in an environment where you have just 0.5% inflation by the end of this year, for the full year, that's the expectation, then maybe that challenges that view. Very different topic. We've been talking about the Disney earnings, and when we talk about the big entertainment companies, you have to think about the strike action that has been continuing, but maybe some resolution. The script writers had a resolution, they've come to a deal, but now potentially the actors as well.
Yeah, so this is a tentative deal on the actors' side, so if that happens, then you will start to see productions restart. We actually had a couple of results out this week, so not just Disney, but we had Warner Brothers Discovery, and then we also had ITV over in the UK, and both of them cited this as, and the issue that's really been caused is that productions are getting pushed back. So in particular for ITV Studios, things that they were going to produce this year or next year are being pushed back into late 2024, into 2025, and now they need to kind of execute on those plans, decide what they are going to produce and what they're not. And then Warner Brothers as well, they, you know, what's happened for them and what you also saw with Disney is all these cost cuts. So they've saved a huge amount of money by not doing these productions. Now they need to go back to normal and kind of figure out what does the business look like.
You know, that's one way to do it, isn't it? Cost cutting. Just don't produce the product.
Just don't do it, yeah.
So that's part of the Disney story. There's more to it, though, and generally they did please investors, didn't they, with what they announced, and one of those investors an activist, so that helps. Arm also in focus on the tech side of things.
Yeah, and really didn't please investors. We actually had quite a few reports coming out. We've had Intel and a couple of other chip makers with relatively good forecasts that kind of beat expectations. Arm in the opposite direction. There's a lot of uncertainty in terms of when large orders are going to come. You know, the smartphone industry, things have slowed down. The cycle has slowed. People are holding on to their phones for longer, so they're not getting bought in the numbers that they were in the past couple of years. And so for Arm, this is their first results, remember, since they listed in New York. They fell about 10% in after-hours earnings. So the chip sector picture became a little bit more muddy.
Yeah, they need to make that data center push work, don't they? And pretty quickly, by the looks of it. Sam Unstead, thank you very much indeed. From our Markets Today blog, you can get more, of course, from Sam, the rest of the team on the front page of the Bloomberg UK website, or by typing TLIV GO on the terminal. Let's check in on some of the individual stocks on the move now and swing back to Joe Easton. Joe.
So we've got Adyen in a trading halt at the moment over in Amsterdam. As we were saying in stocks to watch, that one rose around 30% in the US yesterday. We are seeing indicative prices around that level as well. So we'll have to wait for that one to come up, but it does look like we've got a trading halt there. In terms of Airbus, that one is declining almost 2%. The wide-body jet's really strong, but it is the aerospace business, the satellite unit, that is looking a bit weak, according to some analysts this morning. So that one is declining. We've brought up Worldline here because this is another payments company. We can see it up 3.5%. So although we haven't got the price yet on Adyen, we can see it feeding through into some of the rivals after that really strong guidance from them, giving analysts some joy there. A stock that we're expecting to decline is Wizz Air. There we go. That was like magic, wasn't it? Just dropping in there as I was speaking. Down 7%. Wizz Air is unfortunately one of the most exposed to the war in the Middle East at the moment, and that does look to be weighing on their earnings. Around 5% of their sales come from Israel, so that one is weak after their report today. We'll still have to wait for that price on Adyen, so we'll move on to see what else we've got on the board at the moment. We've got a lot of earnings out today. AstraZeneca is one of them. Strong cancer drugs once again for them. Obviously the vaccine profits are easing quite considerably, but that one doing well today. Zurich Insurance, that one little changed at the moment. That looked pretty strong because natural catastrophes are quite low, and that's benefiting the company at the moment. We saw the same from Swiss Re just a couple of days ago. Pretty strong earning season for them. In terms of Novo Nordisk, Eli Lilly. Now, Eli Lilly, we said in Stocks to Watch last night, had their weight loss drug approved. $1,000 a month. Cheap and cheerful, I guess. I'm not too sure about that. It still seems quite pricey to me, but it is a bit of a price war in the obesity drug space, and we're seeing Novo coming down around 1.5% because of that. Taylor Wimpey, they've got earnings. Just briefly on that board before, Taylor Wimpey was pretty strong after Persimmon yesterday. Moving on to the exchange world, Euronext. Now, they're doing better. Volatility is low in exchanges at the moment, but their data business seems to be supporting their earnings, according to their report, which was released last night. And a big dropper is Flutter Entertainment. Now, this is related to their US business, American football, baseball, all the sports I don't understand. They are seeing weak earnings in that, according to their report today, and that is getting hit. I also saw Entain was slipping, a bit of a read across there. S4 Capital, Martin Sorrell's company, another profit warning from them. Advertising is weakening, particularly in tech. Places like Meta, Google cutting back on their ad spending. That one dropping 24% in London, a big decliner. And finally, moving back onto gambling, 888, the owner of William Hill, the FT reporting that DraftKings in the US considered buying the company in June, decided not to, but we're seeing some positivity from that. 888 rising in London.
Hey, it all comes back to those US sports. Joe, thank you very much. Joe Easton from our equities team with a briefing on some of the stocks on the move. Here's what we're watching out for then in markets today at 1:30 p.m. UK time. US jobless data will be due out. At 2:30, Atlanta Fed President Raphael Bostic and Richmond Fed President Tom Barkin participate in a fireside chat in New Orleans. Later, two central bank chiefs will be speaking. ECB President Christine Lagarde is scheduled to appear at an event in Brussels at 5:30 p.m. UK time. And at 7 p.m, Fed Chair Jerome Powell participates in a panel discussion on monetary policy at the IMF's annual research conference. We'll see if anything comes of that, Tom.
OK, coming up, we're going to speak to the CEO of consulting firm Accenture on the company's business outlook and its AI strategy. Stay with us for that. This is Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight, because it's really bothering me.
Ah, my knights.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right, I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is Markets Today, 11 minutes past 8 here in London. This is what European equity trading day looks like. Pretty flat, fairly uninspiring, to be honest. Some slight moves on European equity markets. US futures also very range-bound, just down a fraction, waiting for Jerome Powell to speak later. And a bit of data, of course, out of the US labour market, it being a Thursday. Now, speaking at the New Economy Forum, the Citadel founder and CEO Ken Griffin says the world has changed radically in recent years.
Now we're talking about deglobalization. We're talking about re-architecting supply chains. And some of this is rooted in the behavior that we saw in the pandemic. We saw countries hoarding personal safety equipment. We saw the tension around the distribution of vaccines around the world. Countries are much more sensitive to what do we want to have created domestically so that we're not reliant upon global trade.
Ken Griffin there speaking at the New Economy Forum. Let's talk about that as one of the big themes at the moment, deglobalization, but also AI, another topic much discussed in 2023. I'm pleased to say we're joined by Julie Sweet, Chair and CEO of Accenture, the global consulting business. Julie, really nice to have you here in London with us. Let's start with that deglobalization theme. Lots to talk to you about, though, in terms of the mood of clients, the global economy and AI. But let's go with globalization, as Ken Griffin was talking about that. I'm interested to know, given the consultancy work that you do globally, how much are you seeing this actually being acted upon, supply chains being deglobalized or de-risked to some degree? What are you seeing?
I'd focus more on the word of re-architecting, because we're still seeing global supply chains
chains, they are changing. And, you know, it's interesting, in the UK AI Summit last week, you saw sort of the opposite. You suddenly saw cooperation with AI. So I think it's too early to be declaring that deglobalization is the trend. And our clients are really focused on where can you find growth and how am I going to find new kinds of productivity. Some of the deglobalization that we're talking about is really the fact that technology can have you get more productivity at home. And so it's not simply a geopolitical, it's really driven in what are the opportunities for companies today.
And Julie, look, Anna touched on this in terms of your clients. It was interesting. We were speaking to the Deputy CEO of Credit Agricole yesterday. He said, and he was talking about getting his bank match fit for the volatility ahead, for the challenges around the global economy ahead. I just wondered to what extent that is a broader sentiment that you're hearing from your clients in an environment of slower growth, in an environment of higher interest rates and a challenged consumer.
Well, Tom, I'm in Europe all week, and it's a tour of the economy, right? So CEOs of energy, insurance, retail, consumer goods, industrial, and the theme has been very determined to make the companies more resilient, but also to grow. So the sentiment's strong.
At this point.
There's not fear. Look, this generation of CEOs has led through a lot of different shocks. The macro's not our friend, and so we have to find new ways of growth. So technology, data, and AI are the theme across the board. And you're seeing that right here in the UK from what the Bank of England has been doing and delivering a new payment system. You see it in Novartis, building a data foundation to reimagine drug development. We're helping insurance companies find new ways of engaging with customers.
Okay.
It is very determined.
So there might be structural reasons for these businesses to invest and perhaps employ consultants to help them to do that and to re-engineer their businesses in some way. But there are also cyclical realities. And I wonder if you're seeing that come up in conversations, coming up in the sort of charge out rates, the billing that you're able to do. What do you see in terms of the numbers on the ground?
What we see is there's definitely less demand overall, particularly in discretionary spending, but there hasn't been a change in major transformation programs. So the conversations are about how can you make an impact on my cost so I can invest more? And so if it's a small project, it's probably not going to be material. And that's what you've seen. Last year, for example, we had 100 clients who did bookings of over $100 million. That is more than 3 times what we were seeing prior to the pandemic, and it's continuing. Of course, on the overall, you see the macro is affecting overall spending, but not the spending that matters, which is transforming companies. And I think that ties to the theme of, you know, CEOs are confident that they're making the right moves for the future.
So I was at that AI summit at Bletchley Park, and there was this palpable sense of excitement. I do just wonder, though, there is the concern, because it requires a lot of investment, AI, and a lot of this is evolving very quickly. There's an understanding gap for many executives in terms of how to actually implement this across their businesses. Is there a concern that you could see a lot of companies piling into investment, a lot of CapEx, and then actually the revenue streams and the profitability doesn't follow?
Actually, many CEOs are talking about let's not have a lot of 100 flowers bloom, right? Because we've seen this movie before in the early days of digital where people spend a lot of money and then can't scale. And that's why they're turning to Accenture and they're saying, where can we make an impact? Give us the 3 areas, not the 100 areas. And that's going to be really important, and that's our firm advice for clients.
Okay, can I talk to you about your business? And, recently you had to take action like a lot of consultancies globally, reducing some headcount, 2.5%, I think, of the workforce. That was back in March, so quite a long time ago. You said at the time you're taking steps to lower costs. Where are we in that story right now for Accenture?
Well, our strategy is to be our own best credential, and actually the actions we took in March were all about reducing structural costs by being more tech, data, and AI driven, as well as having more cost-effective locations, which is what we do for our clients. We actually reduced heads about the same overall last year, but we went after structural cost. This is not a one-time thing in the sense that our belief for Accenture and our clients is you're going to have to use tech, data, and AI to continuously reinvent the enterprise. It's not a one and done, and so that's why you're seeing, for example, manufacturing and supply chain, not very digital in the past. New technologies are now making that the next digital frontier, and that's what drives our business.
When you're hiring, clearly you're going to be very selective at this point. Are you hiring for anything other than AI, or is that just where all the action is?
Look, we're hiring for all technology skills that are around cloud cloud, data, and AI, as well as security. So those are the top areas, and deep industry expertise, because you can't reinvent unless you understand the company. And so those are the top areas of hiring for us.
Okay. Julie, thank you very much indeed. Thanks for coming into the studio. Julie Sweet, Chair and CEO of Accenture. Plenty more coming up. Stay with us. This is Bloomberg.
Is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime. But we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or your advisor?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Markets Today, 21 minutes past 8. European equity markets just modestly lower this morning. Now, Airbus shares have fallen this morning after the plane maker's earnings missed estimates. Speaking to Bloomberg, CEO Guillaume Faury says there's still strong demand for the company's planes.
Single aisle business, so the short and mid-range activity will continue to dominate in number of planes. We've seen the activity on the single aisle recovering much faster after COVID than it was for wide bodies, for long range. But we think long range will follow up, will also recover first and probably even stronger moving forward. And when we look at the long-term perspectives for the market, we expect both single aisle and wide bodies to significantly grow to the extent that we believe there will be around 40,000 planes to be delivered in the next 20 years.
Guillaume, you're ramping up, as you just confirmed to me, the 350 program. You're going to go to 10 a month, 2026. That's not a big push higher. You're basically going from 8 to 9 to 10 by 2026. Picking up on Romaine's point, is that you signaling caution that you actually think the big push we're seeing for long-haul demand at the moment is not sustainable? Could you take that program higher by that point if demand remains as robust as it is now?
Well, actually, we see the demand growing. We see a recovery in the demand, and we were at a low point of rate 4 on the A350 during COVID. So we went from 4, and we keep growing, and we are now targeting 10. it's slightly, or it's very comparable to what we had pre-COVID. And we had said that the traffic itself would be recovering back to pre-COVID levels between 23 to 25, 2023 to 2025. So I think we are consistent with the evaluation, the assessment we made of the recovery of the market going just out of COVID. Do we have the potential for more? Yes. The A350 has the potential to go up to rate 13 based on the existing production system. And we will continue to monitor the demand, the recovery of the demand, with a big replacement cycle for wide bodies that is just starting, and also some expectations for growth. So the market has the potential to go higher, and we have the potential to continue to serve that market by further ramping up. But I'd like to just confirm that rate 10 on the A350 is already a very big number.
The CEO of Airbus there. For more, we're joined by Bloomberg's Benedict Camel, who leads our global aviation team. Benny, good morning. Tell us a bit more about the Airbus story then from here, and a little more around the goals.
So really, the message from 4E, as we heard just now, is that, you know, this is an industry that is back. It's back from COVID. It's back to where it was pre-coronavirus. The production rates show this on the A350, which is their large wide-body plane. They're going to rate 10. And he did signal that they might even be able to go higher. This is a plane that's been incredibly successful this year. A lot of orders that we've had. Just this week, they won one from Asia. We have the Dubai Air Show coming up, where we'll probably see more of these orders. So really, the demand picture is very much intact. You see the stock falling a little bit this morning. Investors might have hoped for a slightly higher earnings. They took a hit on a satellite program. Airbus is a diverse company. They have the planes, they also have defense, they have helicopters. And there's always something doesn't go quite right. And in this case, it was satellites. So that took a bit of a shine off the earnings, and maybe that's what investors are focusing on this morning.
So Benedict, from the manufacturers then to the airlines themselves, and we had earnings through from Wizz Air. We were speaking to the CEO who says, look, we're relatively well positioned in this environment as consumers maybe downgrade and go for cheaper options. The stock, though, being absolutely hammered down close to 8%. Where is the concern? Where does that lie around Wizz Air and its fortunes going forward?
There is some concern going into next year. I think everyone agrees that this has been a great year for aviation to come back. The summer has been very strong across the board, particularly the low-cost carriers have done well. If you look at what Ryanair did a couple of days ago, if you look at Wizz Air, EasyJet, all those earnings were strong out of this year. But I think it's the forward look into next year where people are a little bit more worried. And Varadi, the CEO that we spoke with this morning from Wizz Air, he signaled some of that. We don't know what geopolitics will be like next year. A lot of these airlines have suspended flights to Tel Aviv, and the wider region is really a concern here. The cost of living crisis is not really beyond us. Inflation remains persistently high, so a lot of people might be rethinking their travel plans next year. So there is some uncertainty baked into next year, and that is showing in the earnings.
Yeah, and they did seem to just at the margins guide a little lower for the top end of their full-year net profit guidance. So that weighing on sentiment, no doubt, as well. Benny, thanks very much. Bloomberg's Benedict Camel joining us there on the aviation sector. Lots more to come next week from the Dubai Air Show, of course. Coming up here on this programme, we're back at the New Economy Forum in Singapore. We'll be speaking with the CEO of Lelapa, the African AI lab focused on building products designed for Africa. This conversation coming up shortly, and this is Bloomberg.
DHL is sending a consistent message with its investments. The company spent 123 million euros to upgrade its logistics centre at the Cologne Bonn airport, designing it around key strategic goals.
What I love about this building is it actually shows the big mega trends which formed our strategy 2025, which was inaugurated in 2019 when this building opened. So globalization, connecting the world. E-commerce, we have a lot of sortation facilities here for smaller e-commerce shipments. Sustainability, it's a very sustainable building with solar panels on the roof and everything. And digitalization, and well, you can obviously see that it is quite automated.
How did the team pitch this investment to you initially, and how hard was it as a sell for them? How quickly did you turn around and say, yes, this is worth 123 million euros?
Of course, you always have to make sure that you have the right capacity for the growth in the network. And at that time, they came and said, hey, we will really see a strong growth in e-commerce volumes on top of the regular B2B growth. We need more sorting capacity. We need this building. And of course, there are always debates. Does it really have to cost 123 million euros and so on? But fortunately, they convinced us, because then with COVID and the volume surge, we urgently needed the capacity.
Could face bigger challenges next.
It was going to keep rain World Cup. This is a 3.
As the economic picture does.
The OK is getting ready to make a decision.
This is Markets Today. We're 30 minutes into your European trading day. Here are your top stories. China's fragile recovery. The world's second biggest economy returns to deflation, adding to expectations more stimulus will be needed to shore up growth. Disney's dreams come true. The House of Mouse rises in late trade as fourth quarter profit beats, and the entertainment giant announces more spending cuts. Plus, vision loss. SoftBank's flagship fund is in the red again as valuations on some of its bets decline, while Arm disappoints on its first earnings report since listing. Tom, a raft of headlines, some macro themes, plenty of earnings to still focus on. All that adds up to a bit of a sluggish session for Europe.
Yeah, deflation, as you said, in China, the inflation question and the response from the Fed in focus when we hear from Jay Powell later. To what extent will he push back, if at all, on these slightly looser financial conditions that have come through just in the last few days? European stocks have moved a little bit lower, currently down 0.1% across the European stocks 600, the European benchmark, of course. The DAX at 15,022, 15,227. It's flat, the DAX, over in Germany. Auto's actually got a bit of a lift yesterday. We'll see how the sector breakdown is shaping up today. The FTSE 100 currently back below 7,400, a drop of 0.3%, and flutter within the entertainment sector is dragging and weighing on the FTSE 100. Briefly checking on your sectors then, the biggest losses coming through for the likes of retail, down a full 1%. Some gains, though, coming through for utilities, up 0.8. Food also up 0.2%, and industrials gaining 0.6%. That's a check. Across your sectors, the benchmark currently down 0.1%, Anna.
OK, so those are the sluggish markets. Let's step away from the markets. Day 2 of the Bloomberg New Economy Forum. It's taking place, it's in full swing in Singapore. Francine Lacroix joins us from the event this morning. Francine.
Thank you so much, Anna, and I'm delighted to be joined by Pilonomi Muiloa, Chief Executive Officer and co-founder of Lilapa. Pilonomi, thank you for joining us. You founded Lilapa with a very precise aim, and this is AI language learning for Africa. What was the reason behind starting this?
Well, we had a number of reasons, one of which was brain drain that was happening on the African continent. All our most talented people are leaving rather than investing their great brains into solving problems on the continent. The other one is a very clear one, that we wanted to be able to contribute to creating a sustainable economy, and the way that we thought best to do that was through language. And with our skills and expertise in AI, we just recognize it as being something that has the potential to bring about really great positive change on the continent. So it was a natural next step to do it. Yeah.
Positive changes at the same time. And Tom and Anna actually, back in London, spent a lot of time also trying to understand where we end up in AI, how quickly, what some of the catalysts are. But also, I guess, the forces, if not for bad, something that could be nefarious. So are there algorithms that you worry about we either won't be ready for or just don't cater to certain parts of the population?
I mean, absolutely. So the reason why we exist and the reason why we're able to exist is because most language models are unable to support indigenous languages, which means that millions of people are barred from participating in the global economy and that businesses are unable to connect with their consumers. So that's why we're there. But outside of that, I would say one of my main concerns is around misinformation and the spreading of fake news. That for me is one of the scarier effects of AI, especially on the African continent, given conflicts in different areas.
But how do you fix that? Is that algorithms or is that regulation?
I think it's both. I also think it's people, you know. There definitely needs to be regulation. There's algorithms to help counteract it, but it's so difficult to tell where information has come from when it's gone down a very long and complicated chain to get to the people that consume it. So it's a combination of both, and I think that's why it scares me, because I can't think of a way of how to make sure that it doesn't happen.
And how difficult is it actually for you and the company to service so many different cultural, but you know, difficult or changes, but also local languages?
I think the changes are less challenging than being able to serve the different communities and their languages. Ideally, if we lived in a world with abundant resources and skilled practitioners within all of these cultures, we would cater to everyone. But we're having to make decisions and choices about what languages we serve, about what models we build, and about what applications we develop in due to that resource limitation. And it's very much driven by capital, you know. How can we create a sustainable business and make sure that we can continue to create impact? And that informs who we serve to a certain extent.
Do you need funding at the moment, or I don't know where you want to be in actually 4 or 5 years?
Yeah, I was told and advised by very important people that I should always be looking for funding. But
generally good advice, probably.
Probably good advice, but I can't help and think about how these funding journeys and how the business around all of this gets in the way of us really getting down and doing the work. So we're trying to find the balance between doing those two things. So at the moment, we are really just focusing on our models, on turning them into commercial promises to deliver on making language services, digital products and services available to people.
I mean, the focus a lot here at the Bloomberg New Economy Forum is actually how to deploy capital, where capital is coming from, the fact that there's no longer cheap money. So actually also the cost of credit is much higher.
Yes.
Does that impact actually your plans to grow?
Absolutely. I think, I mean, the global climate, as far as investing is concerned, has turned a little bit more conservative given where we are. We are very fortunate as a language-based AI company that we are on a hype wave, and it means that we have a lot more success in finding capital and being able to use it than other companies do. So we're just trying to make the best of it as we can and create and generate as much impact as possible while we have that time available. And part of us working so hard on making it a sustainable business is so that we can continue even when the fads and the fashions change.
And there's so much talk, of course, about the necessity to regulate AI or to try and understand exactly where we end up. Do you think it'll go quicker than we think or actually slower than we think?
I think it depends on what piece you're talking about. If you're talking about AI that genuinely has impact, that is genuinely affecting people's lives in a positive way, solving problems that we witness, I think that's going to happen slower than we think. We're still looking at statistics around 70 to 80% of data science projects never make it into production. And those are the ones that are inside businesses, inside companies who are struggling to put those models into production. On the other side of that, though, we have these openly available mass market tools, which are moving faster than I think anybody thought would happen. But for people who are being exposed to it for the first time, I think they think the world's about to be taken over by AI.
And with that, could we see job losses? And again, I know you spend quite a lot of time thinking about this and actually retraining or training parts of the population.
Yeah, absolutely, especially the African population. What is it, by 2035, 40% of the world's youth is supposed to be in Africa. We need to make sure that they're trained, especially if the world is expecting them to be the future workforce. It exacerbates the brain drain issue where all the best people leave. Yeah, so it's an issue that we're addressing by making sure that we're bringing people home to work on problems that are here, and there really is potential for these models to create impact in positive ways in a particular locality.
Pilonomi, thank you so much for joining us today. That was Pilonomi Mulao, the Chief Executive Officer and co-founder of Lilapa. With that, Tom, I'm going to hand it back to you in London, and we'll have plenty more from Singapore throughout the day.
Francine Lacqua on the ground at the New Economy Forum in Singapore. Thank you very much indeed. Of course, Francine will be speaking to many more guests come up, including the UBS CEO, Sergio Amotti, at the forum later today. Do not miss that exclusive conversation. It's going to be live, 9 a.m. UK time. A redhead crossing the terminal right now. This is one that Joe Easton from our stocks team flagged to us. Adyen gaining 37% as new targets are seen as more realistic. We'll bring you the detail in the next 20 minutes or so. Stay with us. This is Bloomberg.
Are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
This is Bloomberg Markets Today. We are 41 minutes into our European trading session, and European equity markets actually turning a little more positive just in the last 15 minutes or so. The Stoxx 600 now up by 0.3%. US futures have improved very slightly at the margin, now flat to positive instead of being flat to negative earlier on in this program. And now let's talk about some of the earnings stories that are moving markets today. Some of the biggest movers on the Stoxx 600 by points this morning are pharma companies amid the weight loss drug price war, and they are giant businesses. So these point moves certainly have an impact on the overall indexes. Let's talk to Deirdre Hipwell, healthcare reporter here at Bloomberg, who can take us through some of the stories that we're following. Deirdre, good morning to you. And so the focus on Novo is actually a story driven out of the US, isn't it? It's the fact that a rival to some of the very exciting weight loss and obesity drugs that Novo has on its books that have got a lot of attention, turned it into the most valuable company in Europe. There are rivals to that now, increasingly so, and one of those coming from Eli Lilly.
Absolutely. Overnight, the FDA has approved their drug, and also UK regulators. So it is really setting up a battle for this market now, because Novo will be facing competition for the first time. And Eli Lilly has also priced their drug, which is going to be known as Zepbound in the US, at a lower price. So we could be in for a really interesting time to see how that pans out. We've also had news today, of course, that AstraZeneca is trying to enter this market too, this obesity market as well.
Yeah, what are the details around that AstraZeneca deal? They're doing a deal with a Chinese company, and in this case, it may not involve an injection if this all comes to pass.
Absolutely. I mean, one thing to say, it's very early stage. They're only entering phase 1, but they are trying to develop a pill, which would be a game changer for this field because all the other drugs at the moment are weekly injections. They're not the only one trying to develop a pill. Pfizer is also doing that. So there's a lot of potential rivals to Novo and Eli coming through. But if we could get a pill, it could be a game changer.
Yes, and it just underscores, even if at an early stage, just underscores the excitement around that particular product line, doesn't it, Deirdre? Other things to do with Astra, I mean, there's always a lot of focus on cancer treatments for AstraZeneca, but I think we heard quite a bit recently at a cancer event, a conference around that subject. So what else stands out to you on AstraZeneca as we see this particular share up by 2.9% this morning?
Well, they have upgraded their guidance on revenue and profit, and that is based on their oncology field. They are a leader in this field, and they've had some recent positive news on that too. So that is the main driver of that. And of course, you know, it's something that Pascal Soriot, the CEO, has led and has driven since he took over. And he only recently was telling us that he plans to stay on for another 5 years. And let's see what he can do with this and the obesity drug space.
Yeah, not planning to go anywhere anytime soon. Thanks very much to our reporter, Deirdre Hipwell, with the latest on those big pharma names. Now, Disney shares rose after hours as it reported quarterly earnings that beat expectations. The company says it's also trimming costs further as CEO Bob Iger comes under pressure from specific investors. Bloomberg's Ed Ludlow has more.
Disney's going to cut even deeper, and the $2 billion of additional cost savings it's targeting, along with the improvement that they've shown on the bottom line, is going to help Bob Iger ward off ongoing activism. Trian Fund Management and Nelson Peltz are still front and center. Increased activism, they're seeking more board seats. And actually on the call, Bob Iger said that he recently took a call from Nelson Peltz, but wasn't clear on what it was that Peltz wanted. Away from the activist drama, of course, streaming was the focus, and the losses are narrowing at the streaming business. That helped the bottom line in the quarter gone. But in terms of this big picture question around profitability in streaming, Disney said that that is something that's possible by the fourth quarter of the fiscal year we just entered. And as always, you look at the Disney Plus subscriber count. It grew to 150.2 million subscribers overall for Disney Plus, and that is a return to growth, something that investors were pleased about, but with these additional cost cuts, there are questions about the commitment to content and the content slate. Ed Ludlow for Bloomberg News in New York City.
Okay, Ed Ludlow there breaking down the Disney earnings. On the earnings of the Dutch payments company now, Adyen, because that company stock jumping. Currently, you're up 33%, a huge jump. In fact, it's the biggest gain since about June of 2018. And this is on the back of third quarter sales that are better than expected, much better than expected. And important as well, its new medium-term goals, according to analysts, are coming through as being more realistic and credible. This is after the previous set of earnings caused great concern about particularly competition. So it seems to be that the medium-term goals being more realistic, more credible for analysts, that is assuaging some of their concerns. And then again, Q3 sales coming in much higher than expected. Adyen soaring on the back of that. Right, let's get some of the other top red stories on the Bloomberg terminal today, get you up to speed with what is happening globally. And with its offensive in Gaza now in a second month, Israel says there are no time limits on achieving its objective to destroy Hamas. That is according to Benny Gantz, a senior member of the country's war cabinet. The US, meanwhile, says it has carried out what Defense Secretary Lloyd Austin called self-defense strikes on a weapons depot in Syria. US forces have been attacked several times in both Syria and Iraq since last month. Former US Secretary of State Hillary Clinton discussed the outlook for the region at the Bloomberg New Economy Forum.
I think there needs to be new leadership of the Israelis and the Palestinians in order to have any chance at some kind of peace deal, especially a two-state solution.
Now, the Federal Reserve is scrutinising Morgan Stanley's wealth management business over its measures to prevent potential money laundering by wealthy clients from outside the US. Bloomberg has learned the regulator is pressing the firm to improve controls and processes. Morgan Stanley told the Wall Street Journal it will rectify shortcomings.
The third Republican presidential debate focused on foreign policy and the party's election loss, which candidates blamed on Donald Trump. The debate's first question, however, was on the absent former president's wide lead in the polls. The five hopefuls also backed aggressive military action by Israel against Hamas, but clashed over more support for Ukraine. Bank of America Chief Executive Brian Moynihan says his company has a succession plan in place and that, quote, nothing is left to chance in deciding on his eventual replacement. Moynihan's remarks come 2 weeks after Morgan Stanley named a replacement for James Gorman after a 14-year run that reshaped the Wall Street Bank. Striking actors and Hollywood studios have reached a tentative deal that would end one of the entertainment industry's longest labor disputes. Actors joined screenwriters on picket lines in July, demonstrating against streaming service pay and fast-developing AI technologies. The Writers' Union reached a deal back in September.
OK, coming up, central bank chiefs Jerome Powell and Christine Lagarde, both due to speak later today. Markets will be watching for any signs of policy shifts. We're going to look ahead to those speeches and where the market is focused. Stay with us. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Markets Today. We are 52 minutes into the European trading day. You're actually seeing a turnaround in sentiment across European stocks. 0.2% is the upside coming through after the futures were looking mixed to down. But you're seeing gains now, 0.2%. US futures also just edging into positive territory. S&P E-minis now up 0.1%. I do wonder what the market reaction is going to be to the summit, the crucial summit next week between the two presidents, Xi Jinping and Joe Biden. And that is my must-read of the day. Coming through from Min Shin Pei, always really smart on China, from Bloomberg Opinion. And he's pointing out how important this meeting is globally, but how important it is as well for the Chinese president. Here's the quote then coming through from this piece. Xi has multiple reasons to halt the downward spiral in relations with the US. Most obviously, Sino-US tensions are destroying investor confidence and making China uninvestable. Inbound foreign direct investment this year has fallen to an historic low. That line coming from the Bloomberg Opinion piece by Min-Shin Pei, outline why this is so important, not just for the geopolitics between the two nations, but also for the domestic politics of Xi Jinping as he faces up to all of these challenges. Well worth a read on the Bloomberg terminal and on Bloomberg.com. Let's get more on these markets, though. Step away from the geopolitical angle and look at the data coming through from China. Let's bring in Noor Al-Ali now from our MLive team. And on China and on deflation, just a reminder of the challenges in terms of reviving consumer sentiment. Yes, a lot of it was down to softer pork prices, but it's a reminder that there may be more steps needed from policymakers there.
Yeah, absolutely. And it's a completely different story than the rest of the world is dealing with right now in China. China is dealing with a deflationary problem, which, reminder, is a much harder issue in economics to tackle from a policy perspective than inflation. You have to try and stimulate the economy in a way to kind of boost and revitalize it. But at the same time, you have to also maintain all these different aspects of the market and keep it balanced. And so it really comes at odds when they're trying to boost their currency at a time when they've got deflation. So it makes their exports look a lot less appealing, as Mark Cudmore was talking about earlier. So it's a really tough balancing act and a dynamic that requires a lot more than just monetary policy prudence here. It requires fiscal stimulus and all these different tools thrown at this deflationary issue until it somehow resolves itself.
Yes, and thinking about the broader inflation themes, I'm watching some comments coming through from the Bank of England's chief economist Hugh Pill. He's speaking at a conference and he's talking about the tightrope that the UK has to walk, in not using those words, but talking about some of the drivers here. He says developments in the real economy have been weaker than forecast, but he also says there's more inflation persistence than previously thought. I mean, just in two sentences, underscoring the dilemma that the Bank of England faces, and the pound is sort of flat on those comments because it talks to both of the challenges.
Yeah, absolutely. And we've had Bailey as well come out yesterday and push back on those market expectation of cuts. And look, this is a global issue right now. Policymakers are at a point where markets are pushing back. Markets have found a new narrative. They're done. They think, interest rate cuts are going to come as soon as next year, and they're starting to react to those expectations. But central banks need those yields to stay higher so that they can act instead of another interest rate hike. And we've seen that from the RBA. We've seen the RBA pause for a few months and then raise rates and even raise their inflation expectations by the end of 2024. And what the BOE, the Fed, and the ECB are trying to do is they're trying to push back on those expectations while also maintaining tight policy. So you can see it's a very tough dynamic here, where they don't want to hurt their economies that much more, and they want that policy transmission to feed through to their economies.
Well, I mean, even to the point where some people have raised the question as to whether or not, at least unofficially, the Fed is now aiming at kind of yield curve control, whether the level of 4.5% is kind of the optimal level. The Bloomberg Financial Conditions Index looks to be pointing back into a kind of accommodative territory. So on that, should we expect that Jay Powell pushes back on some of the softening in terms of financial conditions that come through in the last few days when he speaks later?
Well, look, we've had expectations yesterday. We were all like, oh, Powell's going to come out and he's definitely going to give us something. And he didn't, right? So, and if you look at it, just so soon after a policy meeting, we haven't had a lot of data points. CPI is next week. I don't expect him to try and move the needle as much beyond what we've seen last week. And that's predominantly because not much has happened since then.
Yeah, absolutely. We had expectations yesterday. They're lower for today than perhaps. Noor, thank you very much. Noor Al-Ali joining us from the Markets Live team. You can get up-to-date analysis. MLI Vigo is the function to use. The Pulse is up next. Sergio Amolti, UBS CEO, speaking to Bloomberg. This is Bloomberg.
on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority. And market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Kriti Gupta in London. In just a few moments, we're headed to the Bloomberg's New Economy Forum in Singapore. Our very own Francine Lacqua will be speaking to the UBS Group CEO Sergio Ermotti. It's an interview you do not want to miss after not only their earnings conversation today, but of course their massive acquisition of Credit Suisse. Plus later in the hour on Bloomberg UK, we're going to recap the King's speech, the latest figures from the UK property market, plus Bloomberg Economics, explaining why it thinks the UK is already in the recession everyone's warning about. But before we dive into that, let's take a quick look at the European market story, because of course there is going to be a lot of cross currents. Remember, earnings are coming out fast and furious, but you're actually seeing some green on the screen. A lot of the outperformance coming from the French benchmark there, and that's going to be crucial again as we talk about the outperformance. Where is the regional outperformance? The IBEX not far behind, the FTSE MIB as well. But if you actually look as well at, say, even where the FTSE 100 stands in comparison, you are seeing a lag there as well. But let's go to what the bond market is pricing in, because at its core is going to be, nope, we're going right back to the equity market. Don't worry, they're both very, very interesting. Let's go to the equity market first. Forgive us for all the back and forth there. But the green on the screen from the equity market is going to be a function of the bond market. And that's the core of the point that I'm trying to get to, because of course at the core of all of these earnings stories that are driving the equity market are the margins story. And that's what you're seeing from a lot of these companies as well. They are actually coming out with higher margins, which wouldn't be the focus if inflation wasn't actually the issue at heart. Yet it is. And that, I think, is really where the bond market and the equity market are on two completely different pages. Nevertheless, what you need to know is that there are some pretty significant movers today, which brings me to the companies that you need to know. One of our top movers, one of the biggest index contributors, by the way, to the Stocks 600 is going to be Adyen. And this is, of course, the payments company, higher by 31%, giving the street quite a bit of reassurance. And that is a really big deal because, of course, payments right now have a massive burden to lift here in simply saying that they're putting out these new targets. They are non-profitable tech companies, and they're basically having to prove their own worth. Adyen, on the other hand, gaining, well, now 31%, but it was as high as about 37% intraday. Their new targets largely seem more realistic. Their guidance coming down a little bit, but really providing a lot of relief for those investors who are saying, can they actually eventually hit some of their targets. That's just one of the positive movers. I'm going to skip down to the bottom and talk about AstraZeneca for a second, because those earnings coming in positively as well. Now, one of the concerns around AstraZeneca was simply this idea that after the COVID vaccines, where are their next leg of revenue going to come from? But it's actually obesity that's coming to the rescue, specifically the drug that actually targets patients with obesity and diabetes as well. Now, they've had a new agreement with a Chinese biotech company that could be worth as much as $2 billion, but it is still experimental. Nevertheless, creating a little bit of reassurance in the market. Those shares higher by 3.2% as well. To the downside, though, and these are going to be your two biggest weights on the stock 600, is going to be Airbus, down about 1.5%, and Novo Nordisk as well, down about 1% as well. I want to go to Novo Nordisk first, because that is a stock that is really reacting quite heavily to what you're seeing in the UK. Again, an FDA approval getting a little bit of approval for an obesity drug, Zepbound, over in the United States. That is direct competition with Novo Nordisk's own candidate for that, and therefore that competition story down about 1.2%. Airbus as well, down about 1.5%, as we really worry about just whether or not they're going to be able to make their delivery targets. Again, those are your biggest movers on the day. I want to get a quick check on the bond market as well, and that's where I think the Fed cuts conversation really, really matters. And this is the story I want to tell you here, because when you look at the moves in terms of financial conditions index, we've seen a lot of easing from there. You've seen less volatility in the market. I'm sure all of that's going to come into conversation when we go to Bloomberg's New Economy Forum in Singapore for a conversation between UBS Group CEO Sergio Armati and our very own Francine Lockwood. Take a listen.
Start fast. Thank you, everyone, for joining us. I mean, the macroeconomy, and we're listening to a panel, is all over the place at the moment. Do you worry that things will be even more volatile, Sergio, for what they've been so far?
Well, everything can happen, of course. We are still missing a major escalation of the geopolitical events. But having said that, if I look at what happened in Ukraine, what's happening right now in the Middle East, and it's quite, it's already quite challenging. So I am relieved that at the very least the situation between China and the U.S. is calming down, and at this stage we just don't need something else coming, for sure.
Now, are you confident actually that the U.S.-China relationship will get better?
No, I'm not confident because I'm not in control of that. But what I know is that the world cannot afford an escalation, and most likely both countries cannot really afford something to escalate in terms of economic consequences. I mean, the situation in both countries is fragile, and I guess a geopolitical escalation is not going to be in the interest of both countries.
What does that mean for the economy, the uncertainties in the economy and interest rates, and how central banks view the future?
Well, central banks seems to also have a very little visibility about what's happening. You see the stop-and-go approach on rates. I think that the last round was a sensible pause. But having said that, when I look at, from our standpoint of view, my standpoint of view, when I look at the language, I'm not so sure it's over. And I'm not so sure they really believe rates have peaked. I personally think that I'm more in the camp of high for longer than higher for longer. But I don't see how we can bring back inflation at target. Everybody focuses very much on the big drop. But the truth of the matter is that inflation is well above target rates across the globe, and is much stickier than we think. So I don't see how you can bring back inflation without creating an economic downturn. We start to see it now clearly in Europe, and most possibly also in the U.S. soon. So
if you have interest rates high for longer, and there's an economic downturn, what breaks? Is it companies defaulting? Is it commercial real estate? Or are there other pockets in the market that you worry about?
Look, I would say that companies, the vast majority of the companies are well placed in terms of capital position. I'm not so concerned at this stage about the private sector. There are, and if you want to look at major events, right? Black swan events or things that can really go wrong, history tells us that they usually come from government or real estate. So I think that while we look at the private sector, I think that the reality is that the most fragile part of the equation, if I look at the real estate, commercial real estate markets across the world, the post-COVID positive momentum was very short. So, and now the reality is that we see that COVID has changed the way people work, people use offices, and we see as we speak that that one has to be watched carefully.
But commercial real estate, I mean, we talk about it so often, and it's been telegraphed so much that surely a lot of the positions are starting to be unwound. Are starting to be unwound. That, I mean, if you talk about it as being a big event.
Right, but also there is another element, because more and more also on commercial real estate, if you don't have buildings that are up to the newest ESG standard or climate protection standards, you really have a trouble to rent it, no matter at what price you want to do it. So I think that there is also a rightly so, in my point of view, a push for making sure that we create a more sustainable kind of a landscape in terms of real estates, and so there is a double whammy. Less demand, and if there is demand, is very specific on new buildings or refurbished buildings that have the quality standards and the sustainability standards necessary.
Sergio, you probably have the hardest actually job in banking right now, because you're flying a plane whilst building a plane, right? Because you also have to deal with Credit Suisse. How much time do you spend on each?
Well, the first 90, 100 days was at 90% on the integration. Right now is coming down, but it's still very substantial. I don't expect this to change dramatically from kind of 2/3, 1/3. But it's true that, what I need to pay attention, and we need to pay attention, that clients, I mean, we spoke about the macroeconomic conditions, everything that goes on. We need to continue to stay close to clients. We need to run the business. There is a day-to-day business, there is an integration business, and as we speak, we also see a lot of changes affecting our economies and our way, the way we operate as a bank. Digitalization, technology, artificial intelligence is changing the way we're going to work in the next 3 to 5 years. So the real challenge right now for us is not to be stuck into integrating the bank using the model we had in the last 5 years or we have today, but rather also thinking how it's going to be in 3 to 5 years' time. So I can't, and all of us in the bank cannot afford to be distracted from the clients and from a forward-looking aspect of what we need to do.
Do you think client behavior is changing?
Client behavior in respect of...
Just in general, because of the fintech, because of their expectations and their relationship with their...
No, at this stage I don't see it as an evolution. I mean, usually the expectations of in general, the market and everybody about how fast the technology really changes the business is overestimated, but the impact over the long run is underestimated. No, the only thing that I saw really changing in clients' dynamics and is really more on the asset allocation side. These higher rates have shifted the asset allocation thinking of clients back to a more traditional heavy component on bonds, on basically people are saying with 6.5% kind of yield, 7% even with pretty good quality, do I really need to have risks? And that has changed, but it's a reflection of both risk aversion, but also the attractiveness of fixed income in the asset allocation.
How much are you focusing on Asia?
Well, Asia is still a fantastic growing story for us for the last 20 years. It's going to be for the next 20 to 30 years. We are in 13 countries here. We are in Singapore today. We employ 5,000 people in Singapore, the two banks combined. So we are managing 650 billions of assets, clients' assets. So it's growing. So wealth creation is in this side of the world, and the underlying trends supporting wealth management are intact, particularly in this region. So we need to continue to look at way to lever that. The momentum is good, although I have to say that, of course, when you come here now compared to 4 or 5 years ago, you see some convergence to what we see in Europe and the US in terms of economic developments, uncertainties, and coming from different fronts. So,
Sergio, you've also had a good 24 hours because of the AT1s, right? UBS is back in AT1s, and the demand for that was pretty incredible.
Yeah, that I have to say that we were very pleased. I'm very pleased to see that. Now, of course, you never want to come out with any new issue that is not performing, but I would say it's probably one of the highlights that we saw in the last 7 months, because in a sense is creating $36 billion of demand for an instrument and a situation in which, until very recently, people would say the AT1 market is no longer an investable market, or for sure not for a Swiss bank. Actually creating a record demand for the instrument. It's a testament of the confidence, not only in UBS, but I do think also to the fact that to the Swiss system, to the Swiss financial systems. And people are slowly but surely recognizing that that event in March was an idiosyncratic event. And the necessity to trigger whatever needed to be triggered was inevitable.
So do you think that that means that actually the trend, the appetite for AT1s will continue?
Well, looks like. If I look at the kind of demand we got, I do think that people understand that the AT1 is a very important element of our capital stack, and of course we have the credibility to continue to use it, and it's very good because we are accommodating a big demand for semi-fixed, hybrid fixed income, but at the same time is very beneficial to our shareholders because this is loss-absorbing capital that has a very attractive terms in terms on a pre-tax, on an after-tax basis. Sorry, in terms of cost of capital. So it's a very efficient way for us to, recalibrate our capital base.
Sergio, how do you view the banking sector as a whole? Can European banks really challenge Wall Street?
But look, I think that what, in general, I would say that in certain areas of the business is not advisable to try to compete with the incumbent players who are by now very dominant. If you do so, you have to be very focused, like we do in wealth management, where we are a global leader. We manage 3.7 trillion of assets. We are not the largest in the US, but we still manage a big chunk, 1.7 trillion is US clients. So we see a lot of growth potentials in the US. If you think about only a few years ago, there was 12,000 people with more than 100 million in assets. Right now we have 36,000. So in 5-6 years. So the market is growing. So if you want to compete in those segments, and if you have the capabilities, yes. In broader banking, commercial banking and universal banking is not advisable.
But who do you see as your greatest competitor in wealth management?
Well, I think that the incumbent local competitors are known. So the big names, they are all quite present. Our differentiating factors is that we are probably the only one who has a truly global reach in being an important player, not only in the US, but also number one in Latin America, number one by far in Asia, number one in Europe, and in Switzerland. So we try to differentiate ourselves. We are more, I would say, horizontal in the way we cover the sector, and our US peers are much more US-centric.
How do you see regulation developing? actually, for global banks?
Excuse me?
Regulation, how do you see it developing in?
Well, regulations, of course, there is, first of all, the finalization of Basel III is something that we knew, we anticipated. That's the reason why, for example, for us, it's going to increase our capital requirements by maximum 5%. So it's okay, and actually is good that we finalize the implementation of this so that we can create a true level playing field. I'm glad to see that the aftermath of what happened in March haven't come to the conclusion that we need more capital or liquidity. If you look at what happened in the regional banks in the US, it is clear that the same regulation, or a big chunk of the regulation that is applied to larger institutions should be applied to big banks. Particularly if you talk about 250 to 300 billions of balance sheet, you should have a little bit more advanced methodologies in the way you manage treasuries than the one we saw. And in fact, the larger banks, the G-SIFI banks, were a safe haven, except one, which had a very idiosyncratic problem. So we don't need more capital, we don't need more liquidity requirement per se, but we need to recognize that a run on a bank nowadays is much different than it was 5-10 years ago. In very few seconds, you can move out money from the bank. And so we need to take in account how we calibrate liquidity requirements, but also how we make the balance sheet of banks more eligible for access to the central bank window, so that in case of an emergency, there is at least a larger buffer of liquidity available to sustain a crisis.
But do you see, for example, regulators asking for a different base of depositors to avoid basically a bank run on mobile?
Well, that's not so easy because, yes, I think that more than a different base of depositor, a different tiering of the deposits in terms of maturity, that's something that we always try to do, but it's not yet the end of the problem, because if a bank is under stress, as those deposits are rolling off, you're still going to have the same problem. So it's very important to make sure that the quality of the assets is good enough to make them eligible to the central bank window. And that in itself is going to stabilize a crisis. It's not going to resolve a business model issue of a bank, but at least it can avoid conflicts or contagions in the rest of the system. So that's the biggest lesson learned from the crisis in April.
Sergio, when you look at the integration, I mean, it's hard because a lot of it, you rely a lot on talented bankers, and with that goes culture. So in these big integrations, it's always been culture in the past that's been a problem. How do you deal with that?
Well, look, we are onboarding the new colleagues of CS with the right spirit. I don't think that per se there is a cultural clash between the two organizations. We have been competing very fiercely, but basically more or less with the same business model. What is helping us is that, of course, this is a UBS-led acquisition. Processes, policies, risk management approaches are UBS. So we just clarified this matter in a way that, in my point of view, avoids, potential conflicts. So, of course, in some cases, not easy. We are not trying to say that we are per se always the better solution, but it's the fastest and the one that guarantees also in respect of onboarding and understanding each other, how we operate. If we try to debate too much on what is the best way of doing business, we would not only delay the integration, but also potentially create some clashes.
I know that a lot of people in the audience are chief executives that have to deal with the talent and people they hire. You spent $500 million on talent retention. How do you choose who you keep?
Well, look, first of all, if you look at in the big scheme of, in any M&A, not only in banking, usually there are retention that in many cases, in our case, is going through also in order to make sure that enough people are staying to guarantee the well-functioning of the banks. Because as we speak, and I'm talking about functions like in risk management, in compliance, in finance, and not only for producers. So people think that we are talking about producers, but in effect, what we need to do is to make sure we continue to have operational stability. It's very important. We are still running 2 G-SIFIs. It's, UBS as an holding, but we have 2 systemic relevant financial institutions up and running. So we need to make sure that we are fulfilling regulatory requirements and the expectation of clients. So that's a good investment that allow us then to create value over time.
But you've also moved some $5 billion in wealth management assets to the wind down unit, right? Like a bad bank. How do you choose what goes in that?
Well, the vast majority was, to be honest, already pre-selected by Credit Suisse. So what we put on top of it are some businesses or relationships that we felt were not in line with our policies and guidance, but the vast majority was containing and defining the perimeter, which we did as of the end of September, and start the execution. Actually, since we took on de facto the management, and in April, we took down the non-core assets by 30%. And another 50% of what is left as we speak is going to run off naturally. But we clearly going to accelerate that runoff in the next few quarters and years.
Sergio, what does your chairman think of you being called the George Clooney of Paradeplatz, which is true?
What he thinks?
Yeah, what does he think?
I don't know what he thinks, but he reminds me all the time, and he reminds everybody I meet, so that I started to tell him, if I'm George Clooney, you are Marlon Brando, and he was all happy about that. But then I told you, wait a second, I'm talking about the one of the Godfather, not the young one. And so we took it that way. So,
Sergio, thank you so much for joining us today.
Thank you. Thank you.
Bloomberg's Francine Lockwood there with UBS Group CEO Sergio Armati. Of course, that at the Bloomberg New Economy Forum in Singapore, basically saying that, several things, hitting many issues from China to their presence in Asia as well. Even talking about liquidity rules, saying that the AT1 demand is seeing a confidence in the Swiss system after their take on simply the issues that you are seeing in terms of appetite to the exposure of Credit Suisse. Of course, we know that was a big issue as well. The fact that they saw that record demand was really important. UBS's Armati as well, saying that the AT1 was a very important element of stack. He also talked about regulation as well, saying that they need to increase the capital requirement by a max of about 5%. You can get all those headlines, of course, on your Bloomberg terminal. I want to pivot, though, from some corporate news and talk about Airbus. Those shares a touch lower this morning after missing profit estimates. The European plane maker saying it will significantly increase aircraft output next year. It's, of course, ramping up production across its range to meet the surging demand. Airbus CEO Guillaume Faury spoke to Bloomberg's Romain Bostick and Guy Johnson.
The single aisle business, so the short and mid-range activity, will continue to dominate in number of planes. We've seen the activity on the single aisle recovering much faster after COVID than it was for wide bodies, for long range. But we think long range will follow up, will also recover first and probably even stronger moving forward. And when we look at the long-term perspectives for the market, we expect both single aisle and wide bodies to significantly grow to the extent that we believe there will be around 40,000 planes to be delivered in the next 20 years.
Guillaume, you're ramping up, as you just confirmed to me, the 350 program. You're going to go to 10 a month, 2026. That's not a big push higher. You're basically going from 8 to 9 to 10 by 2026. Picking up on Romain's point, is that you signaling caution that you actually think the big push we're seeing for long-haul demand at the moment is not sustainable. Could you take that program higher by that point if demand remains as robust as it is now?
Well, actually, we see the demand growing. We see a recovery in the demand, and we were at a low point of rate 4 on the A350 during COVID. So we went from 4, and we keep growing, and we are now targeting 10. It's slightly, or it's very comparable to what we had pre-COVID. And we had said that the traffic itself would be recovering back to pre-COVID levels between 23 to 25, 2023 to 2025. So I think we are consistent with the evaluation, the assessment we made of the recovery of the market going just out of COVID. Do we have the potential for more? Yes. The A350 has the potential to go up to rate 13 based on the existing production system. And we will continue to monitor the demand, the recovery of the demand, with a big replacement cycle for wide bodies that is just starting, and also some expectations for growth. So the market has the potential to go higher, and we have the potential to continue to serve that market by further ramping up. But I'd like to just confirm that rate 10 on the A350 is already a very big number.
Good morning and welcome to Bloomberg UK. A special focus on the biggest challenges facing the British government, economy, financial services, and markets. I'm Kriti Gupta right here in London. We start with King Charles has set out an election-focused government agenda at the ceremonial opening of the UK Parliament this week. In the King's speech, which is written by the government, of course, Prime Minister Rishi Sunak focused on a series of low-cost policies ahead of an election expected next year.
My minister's focus is on increasing economic growth and safeguarding the health and security of the British people for generations to come. My government will continue to take action to bring down inflation, to ease the cost of living for families, and help businesses fund new jobs and investment.
Now, one of the key issues ahead of that next general election is the state of the UK economy, as we just laid out. According to Bloomberg Economics, the UK likely already in that recession that a lot of the markets are warning about. Joining me now, Bloomberg's Dan Hansen of Bloomberg Economics and Joe Mays, who covers UK politics for us as well. Pleasure to have you both on set. Dan, I'm going to start here with you. Yeah. We're talking about a recession already in the works. This is something that a lot of people were saying would happen 1-2 years ago, or maybe 2 years out. Why is a recession happening now?
Yeah, I mean, it's a really good point, isn't it? Because a year ago we were having the same discussion, but it was for very different reasons. It was about an energy crisis, and that was what we thought would tip the economy into recession. We've actually had a year of, relative to that forecast, some good news. Yes, it's been stagnation, but it's much better than a big fall in GDP. The reason now why we think the economy is headed for a recession is because of what the Bank of England's done. Essentially, because the energy shock hasn't had as big effect on the economy, slowed the economy and slowed inflation, the Bank of England's had to do a lot more than it expected, certainly than it expected at the start of the year. And that's why we have a fall in GDP in our forecast. I mean, just one really important point around this that I'll just finish on is that the peak to trough fall in our forecast is very modest relative to historical episodes. So it is a fall in GDP, but it's not wildly different from what the Bank of England said last week. They had stagnation all the way out to the middle of 2025. So the difference between those two forecasts isn't huge.
So the conversation, the pivot there between inflation to stagnation at its core. Joe, I hop into this conversation here because no one's saying stagnation in the political rhetoric. It is still all about inflation. What is the talk at Westminster?
Yeah, I think the talk is, was this King's speech enough for Rishi Sunak to kind of win back the attention of the public, get some momentum into his administration? And the feeling is that it probably didn't necessarily do that. I mean, Sunak is constrained by the difficult economic circumstances we've just talked about. So he's having to do things which are low cost, as you mentioned, such as focusing on crime, such as focusing on perhaps culture war style issues, which might get them a boost in the polls. But it doesn't seem to be translating at the moment. So there's some skepticism in Westminster whether Rishi Sunak can turn it around. still 20 points behind Labour in the polls?
I mean, it's a really tough idea because not only is Rishi Sunak dealing with this, but a lot of world leaders are as well. And I think the way that the UK has really changed what is actually on their agenda is pretty interesting. Do they then set the tone for other world leaders as well? I want to bring you some sound, if I can, from what Andrew Bailey actually said about this very issue. Take a listen.
It can sometimes be challenging, as we've seen in recent years, when the economy is exposed to very big external shocks. And we've been experiencing, and sadly continue to do so, some very big ones of late. We have to recognise that today we live in a world economy which is experiencing fragmentation. And that is at risk of further such pressure.
Now, we know Andrew Bailey there speaking about this risk of fragmentation. It's something that is almost unique to the way the UK economy is structured. When you look at the housing market, when you look at the mortgage market, for example, a very different set of tools that the BOE has to actually tackle this. So you can't actually see them necessarily taking the cue from the Federal Reserve or from the ECB. Dan, your take on fragmentation?
So I think the point I take away, and the broad point I think that Bailey's trying to make, is we live now in a world where prior to the financial crisis, it was all about demand shocks, and it was very easy for interest rates to control that because interest rates control the demand side of the economy. This idea of fragmentation, it goes to the idea of supply shocks. And we've had the financial crisis, we've had Brexit here in the UK, we've obviously had the pandemic, and we've now had the energy crisis as well. And they're all what we call supply shocks. And what that creates for a central bank, at least, and particularly when there's a lot of pressure on the central bank to be the first port of call when it comes to supporting the economy, it creates a trade-off. So inflation goes up, but growth weakens, the economy falters. And so the question for the central bank and for policymakers generally is how do you balance that? Because, of course, if you try and stimulate the economy, try and support the economy, you lift inflation. And the lesson we've had of the past maybe 18 months is that inflation expectations haven't been well anchored. So it's quite possible that policymakers have to focus a lot more on that inflation side of their mandate, and the economy suffers as a result.
Joe, weigh in on that here, because Rishi Sunak famously says when it comes to the tax question that inflation is a tax. How are they changing their agenda to address the supply side shocks that Dan was just talking about?
Well, I think the balancing act that Dan talks about, there's a political balancing act which is very similar, which is that you want to curb inflation, that's Rishi Sunak's priority, but doing that means that you cannot necessarily do the politically popular things you might want to do on spending, such as, increasing welfare perhaps, or tax cuts, as you mentioned. You can't do both those things. So Rishi Sunak and the Chancellor, Jeremy Hunt, have to straddle those two, that divide, that dilemma, and we'll see an autumn statement coming up November 22nd. Will they now lean perhaps more towards the tax cuts because they see that election coming up, they need to do something about the polls? Their backs are increasingly against the wall here, and it's a question of which way will they go? Will they get a bit politically desperate? We'll have to wait and see.
Well, speaking of politically desperate, not that is my take on the situation, but when you talk about, again, with the agenda changing and addressing the inflation, and Dan mentioned the energy crisis specifically, let's talk a little bit about the green agenda here. I think it was ironic that King Charles has been such an advocate of the environment, and yet when you looked at what the King's speech actually laid out, some of it was kind of momentum behind Rishi Sunak's U-turn on, say, EVs, for example.
Yeah, that was a potentially awkward moment for the monarch because he has that history of being very pro-environment, but then having to announce future licensing rounds for oil and gas drilling, not necessarily something he would want to support. But the government's argument is that they're still going to get to that net zero goal, but they're just doing it in a more pragmatic, more measured way. But yeah, it certainly wasn't perhaps King Charles' favourite moment as monarch.
I mean, talk to us then a little bit about the economics of all of that as well. Not necessarily of the monarchy, we'll put that to the side, but let's talk a little bit about the move on the energy side as well, because I think one of the unique pieces of Europe and the UK is that there is an economic incentive here to actually talk about EVs because of the energy crisis. But in the absence of that, in the absence of this pressure from heating bills, from the cost of living, which to be fair is easing, do you still see that same momentum going into alternatives to the energy story?
Yeah, I mean, I think it's a really good question. Actually, what Labour had to do and Labour have done is obviously scale back their ambition on their green agenda. And a lot of this goes back to what Joe mentioned before. It's the fiscal story. There is such a constraint around the fiscal numbers and the fiscal outlook that actually using any fiscal space they have, we know, at least for the Conservative Party, in the run-up to the coming election, is about tax cuts. And any space they have, they'll use that. So the green agenda is being pushed back. I think ultimately there will be a reckoning where this has to happen. But of course, the longer you leave it, the bigger the adjustment that comes to the economy. And it goes back to that point about supply shocks. This is another supply shock that's on the horizon. And so you get to this point where, as I say, you have this reckoning where you have to make this adjustment. And I think it has to come, it will come. But the fiscal reality at the moment means that the path of least resistance is to delay.
What's the breaking point then? I mean, to see this massive pivot from Andrew Bailey when it comes to the rate story, we were talking about this hawkish rhetoric that just would not die down. And suddenly, we're not talking about rate cuts on the agenda for 2024. What changed?
Yeah, I mean, it was a big pivot, wasn't it? In September, it was a real surprise to us, given where things like wage growth, services inflation have been, or are, I should say. And they're the things that have been driving the bank for the past 18 months. That's what's really been driving this rate hiking cycle. And to be honest, what changed? I think it came down to the fact that the labour market looks like it's loosening faster than the bank expected. The economy, as we spoke about at the start, is weakening faster than they expected. And it's really interesting, in that September decision, Bailey had the casting vote. And he went on the side of keeping rates on hold. And I think that's an interesting story about how that will play out next year. If we get tax cuts, that's obviously inflationary. And then that, going to your point about rate cuts, it's like, what is the timing for that? So we're in recession, potentially in recession. We've still got sticky inflation. So that balancing act is going to be very, very difficult for the Bank of England. And on the outside of it all, at the same time, will be the political pressure for the economy to be stimulated, the economy to be in a good place going into the election.
Well, Joe's going to have plenty to talk about and plenty to cover for Bloomberg. Dan Hansen from Bloomberg Economics and Joe Mays from our political team. We thank you both for diving into that. Plenty more to come ahead, including our interview with UK City Minister Andrew Griffith coming up next. Stick with us. This is Bloomberg.
The tag on the product may read "Made in the USA," but the sign on the CEO's door often says "Made in India." Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg.
The role of London, and this is true on crypto assets, distributed ledger technology, but it's also true, I think, on AI and other emerging domains, is we should try and see ourselves as a little bit of a Goldilocks, a bit of an honest broker. So, not at always the bleeding edge. There'll be other regimes that are more dynamic but don't have some of the quality and trust attributes of London. But neither should we put our head in the sand when there's innovation happening. London is a fintech hub, and there are opportunities from technologies as well as clearly risks, and we've probably seen quite a lot of the risk side of the ledger quite publicly. So we want to steer a middle course. We've been, I think, very thoughtful. We've consulted a lot. We came out last week with a set of principles for the regulation of crypto assets in the UK. Again, in part building on what others have done. Europe have come out with their own version. We've built on that, taken a little bit further forward in some areas like DeFi. And not leave it as a regulatory vacuum. So we are now bringing the financial promotion of crypto assets within the perimeter of the regulator. That will, it'll cause a little bit of noise, but it will also incentivize the good actors that want to invest in the right systems, that are willing to be transparent, have the right protective mechanisms in place. It will give them an incentive that they can build a sustainable business on the back of that.
But so do you see crypto as being a kind of increasingly important part of kind of London's portfolio of things that it's
I'd hope so. I think it's ultimately the market will decide, or investors will decide. I think it builds naturally on our strengths in terms of things like fintech, in payments technologies, in clearance, and we've got a big piece of work on digitalization of share registers, of securitizations.
UK City Minister Andrew Griffith there speaking to Bloomberg's David Merritt on crypto and its place in London's financial ecosystem. You can, of course, listen to that full interview on Bloomberg's In the City podcast that Francine Lacqua hosts with David Merritt. You can find on Apple Podcasts, Spotify, or wherever it is you get your podcast. New episodes do drop every Thursday. I want to bring in a true expert about some of the cross currents you're seeing on the economic and the political front. Lizzie Galbraith, political economist over at Aberdeen, joins the program. Lizzie, a pleasure to have you on. Let's start with the King's Speech here. It's not a secret that there is really very little fiscal headroom when it comes to the budget and what promises both Andrew Bailey and Rishi Sunak can actually make. In terms of cost cutting, what can they do?
There has been a process over the last 10 years where we've seen quite a significant amount of government spending come down, but then you had COVID and you've actually seen a lot of that reverse. The size of the civil service has gone back up again. You've had additional strain on the NHS, which has put more pressure on public services as well. So it's not particularly clear where the government can implement a very substantial cost-cutting measure at this point. We are expecting that the government is going to look at some ways to bring down its spending on benefits. So there will be some tweaks around perhaps eligibility criteria or the helping people get back into work. So you're spending less on benefits. But really, the government does have a pretty tricky job ahead of itself in trying to get government spending to come back down going forward.
Well, in terms of bringing it back down, then, it's also partnered, or I should say paired, with this domestic pressure for tax cuts. And I'm curious about what odds you think there are of tax cuts going into 2024.
I think the most likely time we're going to see tax cuts is going to be in the spring budget rather than this coming autumn statement. And yes, there might be slightly more fiscal headroom than the government had initially expected at this autumn statement, but it's still not going to be very much. And actually, from a political perspective, you do want to have voters actually have tax cuts in the front of their minds as you're going into an election campaign. So politically and potentially fiscally, it may make more sense to wait until the spring, even if there is slightly more fiscal headroom than the government has been anticipating at this autumn statement. I think there'll be a lot of political pressure on the government to act now, but Sunak is likely to want to hold off until the spring, partly because there may well even be more fiscal headroom at that point, and they may well be able to get a more compelling suite of tax cuts announced at that statement rather than some fairly small measures now.
Well, speaking of, I guess, compelling arguments to be made, it felt like one of the real sticking points for Labour, and something that has perhaps given them a little bit more of the edge, has been how they've been approaching the business community specifically. It feels like there has been a real exodus almost from the UK because of the concerns around the cost of living crisis, because of the concerns around the fiscal budget as well. Lizzie, talk to us a little bit about the business community and how they might be viewing what Rishi Sunak has to offer.
I think the issue that Sunak has at the moment, that he's been trying to sell himself as the change candidate, the responsible partner of businesses post Liz Truss. And the issue is that actually what we've been seeing a lot of U-turns in government policy around things like green infrastructure. That has lowered business confidence in this government, and you've not really seen any compelling evidence coming from the government that they are the candidate of change, that they are crafting a solution to the economic problems that the UK is facing. Now, Labour, whether or not their solution is the right one or not, have got more of an answer to that question. They have been more focused on generating an argument for what they want to do with the economy going forward, and we've not really seen the government able to back up this change message that they've been trying to sell. And I think that disconnect is the thing that's really undermining the government at this point.
But Lizzie, you mentioned the green reform kind of U-turn that they had made very quickly. Could that actually play in their favor going into 2024, given that, in theory at least, that should be a more economically friendly policy towards the British public?
We've not actually seen the polls move too much since Sunak started announcing these policy changes. So there isn't much evidence to suggest that voters are responding very positively to these announcements. Yes, it's working in some specific areas. You saw in some recent by-elections that it's likely to have had a result because of voter backlash against low traffic zones. But as a country, it doesn't look like it's really moving the needle for Sunak. It doesn't look like this is maybe the single issue that's going to spark a turnaround in his political fortunes at this point.
Certainly something we're going to be keeping a very close eye on. Lizzie Galbraith, political economist at Aberdeen, we thank you so much for your analysis this morning and joining the program. Coming up, the latest survey from estate agents and surveyors suggests that the UK housing market may have bottomed out in October. We're going to drill down into the country's property market next. Stick with us. This is Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Business Week Radio. Live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week. Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
London's rental costs are showing signs of easing, with demand dropping and evidence that people are refusing to pay record costs just to secure a home. Now, according to research from property surveyors, tenant demand across the UK recorded the slowest quarter-on-quarter increase in October since 2021. More broadly, the survey from RICS says house prices will remain under pressure. It's a lot to digest, but not for Bloomberg economist Neeraj Shah, joining us now right here on set. Neeraj, a little bit of a mixed picture when it comes to what you're seeing in the housing market here. What is actually happening? What is your take?
So maybe the best way to look at it is there's less bad news across the board. With the rental side, there's less pressures coming forward. In London, there's a real pushback, actually, and that's really down to affordability. I think tenants have reached their limit, and going forward, some are moving out of London. Some are actually enticed into buying property because they're paying so much rent. You have to remember, rents in London have increased by about 30% since the pandemic. So that's extraordinary. On the other side, house prices themselves, they are still, the survey shows they're still going to be negative, but less negative ahead. But remember, minus 63, that's still a significantly low level. That sort of emulates level in 2009, so it's still quite significant. So
that's quite the comparison. Yeah. So less bad news, you say, but does that mean the worst is behind us? Is this a recovery in the making?
It might be the best way to look at it is that we've passed the peak crunch, but a slow puncture is still yet to continue. And essentially, the bottom line is mortgage rates are still elevated, and that's going to put pressure on house prices ahead. You've had Nationwide, you've had Halifax, all showing a bounce back recently, but I'd throw a bit of caution into that. The transactions are very low at the moment, which can distort figures, but also there's a fundamental lack of supply, and there might be a bit more supply coming through next year.
Would you characterize that bounce back as resiliency, though?
There is definitely some resilience. This is partly because of the labour market. For prices to fall dramatically, you need forced sales, and that usually happens when unemployment rises quite sharply. We are seeing unemployment creeping up, but they're still from historic low levels, and that's keeping people not from selling their homes.
I'm going to put you on the spot here. We've seen a real pivot point from Andrew Bailey. Now you're having rate cuts priced into the market as well. Could this all change? You mentioned resiliency. Is there some delicacy to it as well? 20 seconds if you can.
Yes, there's very much delicacy. One thing, it's all about inflation still. So we don't expect rate cuts to happen until end of next year. So mortgage rates are going to be elevated for some time yet.
Not something that a lot of future property owners may want to hear. Bloomberg European economist Neeraj Shah joining us to break it all down. We thank you so much. I want to give you another reminder to subscribe to our podcast In the City. David Merritt, Francine Lacqua walking you through the key issues to know. You can, of course, find that on your Apple Podcast, Spotify, or anywhere else you are listening in on audio. Great interviews, coverage you do not want to miss. Stick with us. This is Bloomberg.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more. And that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that
it.
really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With 2 more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rate World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make a decision.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right, I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
A very good morning from our world headquarters in New York. I'm Manus Granny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Chair Jerome Powell calls for courage and humility in the Fed's forecast methods. Treasury yields fall to the lowest in more than a month as traders await the auction and more comments from Powell. Disney rises after an earnings beat. Theme parks deliver the biggest boost to profits. Streaming losses narrow and subscribers grow. Ken Griffin warns the world is facing structural changes.
We're likely to see higher real rates, and we're likely to see higher nominal rates, and that will have a real implication on the cost of funding our enormous deficits.
Some pretty big warning shots from Ken Griffin there. We're going to have more from the New Economy Forum throughout the hour. Motti has just finished on stage with Francine Lacroix. Of course, he's talking about it's a good indication the world is taking UBS AT1s. More from Danny and I on that in a moment. Here we are. It is 8 days of a rally, 8th consecutive run-up in equities. That's what we've got on the board this morning. Now, if we manage to put another one in, the VIX, by the way, at the bottom of your screen, would be the longest slide since October 2015. If you manage to have a positive day on this, Jim Reed at Deutsche Bank says it's going to be day 9, the longest rally. Danny Berger found a fact of the day, and she very kindly gave it away. The longest run-up since 2004, if you can have green on the screen by the end of the day. When it comes to the bond auction, nobody choked. I think that's the important point. Nobody got indigestion on the 10-year government bond auction last night, and indeed, the view from UBS is, if you want to be in tech, They, ironically, want to be in China Tech because it's a 30% discount to the Magnificent Seven. The Magnificent Seven, they are more cautious on that there. Eurostoxx 50 up 0.5%. Now, it is led by a stock that perhaps you have not heard of. But payment system in this country, payment system around the world are being revolutionized. There is a stock, it's Aiden, and that is up over 30% this morning. As well as that, you've got the deflationary issues going on in China. Will the PBOC go for an easing? There is Aiden, up 31%. It's still under its IPO price. Danny, good morning.
Good morning, Manus. The bond market rally has been pretty incredible. We're undoing some of that this morning. We're back above 4.5% in the 10-year yield. But as you mentioned, Manus, we had a bond auction. It wasn't the best bond auction, but it happened, and it went off without a hitch. We saw 30-year paper go down to its lowest level in over a month. We're going to have $24 billion on deck today of 30-year notes. How will that go? Will we be able to absorb it yet again? NY Crude, that is higher this morning, but still hovering around its lowest level in 3 months. It slid 7% in the past 2 days. And finally, you know, when I woke up this morning, Manus Cranny sent me an email and said, Danny, you got to put Bitcoin in your market check this morning. He is the crypto fanatic among us. So just for Manus, I've got Bitcoin. Look, it's a good one to have today, up 3 1/3%, above $36,000. This optimism that finally we're going to get a physically backed Bitcoin ETF into the market. All right, the other thing Manus and I were emailing about this morning is it is official. It is officially pricing steady as she goes in this market. For a radio listening audience, I have a chart that's developed market cash rates 6 months forward and 1 month forward. 6 months forward, it is now reading this blue line here, no change. That's right, we're expecting no more hikes. And in fact, Manus, we're pricing in 50 basis points of aggregate cuts for developed markets. That's the first time we have that kind of level since the COVID pandemic kicked off.
Yeah, I mean, even though you've had the RBA go for one more hike this week, Danny, I think the issue is what does 2024 hold? 100 basis points? We're at 90 basis points on the futures at the moment for cuts here in the United States. But probably the ECB will go first. There's a 68% probability the ECB will go for their cuts first. And hallelujah, 30-year rate mortgages here in the States. They dropped yesterday like a stone, so it could be in there. You never know. I could be a property owner in the US yet. Not at 7.5%, I assure you. It's a whole new world. It's a whole new world. We know I love that song. It's Disney. They reported the fourth quarter profit. It beat the expectations as the company launched a beta trial of the bundle, Disney Plus and Hulu, next month.
We expect that Hulu on Disney Plus will result in increased engagement, greater advertising opportunities, lower churn, and reduced customer acquisition costs, thereby increasing our overall margins.
Joining us now is Alex Webb. So Bob Iger's revamp of Disney, it's gathering pace. I think, to coin a phrase from him, an era of fixing, an era of building. Iger is on a mission. Good morning, Alex.
Yeah, it certainly seems as though things are really starting to kick in. Don't forget, of course, Iger came back after his initial successor as Disney CEO was let go, essentially. And the thing that's fascinating is that when Iger, in his first time at Disney, the thing that he left was really investing in growth, scrapping the dividend, turning themselves into a Netflix analog by chasing those streaming subscribers. What's happening now is he's really doing the inverse. He's cutting back on costs. He announced another $2 billion in cost savings, in addition to the $5 billion that have already been announced. They've cut 8,000 jobs already. They say, though, there aren't going to be any further, at least major, job cuts. And this is really building towards the prospects of issuing a dividend again, which is something that in the current climate with high interest rates that investors, I clearly hopes, will appreciate.
So in other earnings, we had ARM yesterday. It's first since it IPO'd. Not so well received, perhaps.
Yeah, the challenge is with ARM that they had really been trying to sell this story that they were an AI stock. We've seen AI stocks, of course, not least NVIDIA, massively bid up since ChatGPT was released almost exactly a year ago. They aren't really in that AI space yet. Their main end market is really sort of smartphones. The brains of most smartphones, from iPhones to Samsungs and beyond, are built on ARM designs. The Apple chips, they are built on ARM, blueprints, essentially. Now, he's trying to pivot. The CEO, Rene Haas, is trying to pivot into new spaces. The thing he's saying is that there are agreements coming down the line. They just don't know when they're going to hit yet. So there was a sort of narrowing of the range, the midpoint of that range, in terms of their revenue in the 3 months through December. The midpoint of that range is below analysts' expectations. So that's not brilliant news for ARM investors in the near term. There is still some optimism looking further forward.
Yeah, it's a bit of a damn squid. After that IPO, you would have thought it was sort of like an evangelist moment on reasons to be involved in this stuff.
You gotta explain that phrase to the Americans. The Americans aren't going to know what a damn squib is.
Well, think of Halloween. They know Halloween, don't they? And you got the little spit. When we were kids, when we were young, way before Danny Berger, you had these little things that whizzed around, and it went. And instead of going whiz, 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 whiz up, it went. There you go. You get sound effects as well. So that is a damp squib. Well done, Danny Berger. It's cultural transition.
Yeah.
Ireland.
Education
Dubai.
on the show.
She's keeping it real. What about SoftBank? I mean, they are up to their knees in WeWork, and they're up to their knees in ARM. It was a loss.
SoftBank still owns 90% of ARM, and of course, when they sold out that 10% a little bit, a few months ago, that was something that they gave them a little bit more capital to invest in new prospects. The challenge is that they haven't in recent years had a brilliant brilliant track record in investing in those sort of prospects. WeWork is really the biggest of the dampest of those squibs, to attenuate the metaphor a little bit. But it's now announced another 1.7 billion in losses on WeWork, in the order of 14 billion they've lost in total. Masayoshi Son, the founder, head of SoftBank, he features in the Apple TV Plus series about WeWork's troubles. WeWork, of course, declared bankruptcy. SoftBank feels the pain more than almost anyone else as the biggest investor. So the challenge now is what is happening with the non-public companies in the Vision Fund, that's their VC arm's portfolio. Nobody knows. That's creating perhaps SoftBank themselves know. They don't know publicly. There are no valuations on those companies. That is creating a huge amount of nervousness among SoftBank's investors.
I am all in for working in damp squib wherever we can. I want this phrase to be waiting for me when I get back to America. It's my favorite British one.
Word of the year 2024, Merriam-Webster.
Yes, I love it. I love it. Nominate it now, folks. Alex, thank you very much. That's Bloomberg's Alex Webb. Manus, let's get to some of the other top stories that are trending on the terminal this morning. Lilly's diabetes drug was approved for weight loss by the FDA. The drug, branded Zepbound, will be available by the end of the year and is cheaper than a similar product from rival Novo Nordisk. AstraZeneca is also entering the growing obesity market, clinching a deal to develop a drug with a Chinese biotech firm.
The Fed is scrutinizing Morgan Stanley's wealth management business over its measures to prevent potential money laundering by wealthy clients from outside the U.S. Bloomberg has learned that the regulator is pressing the bank to improve controls and processes.
Israel says its military has pushed deeper into Hamas territory in northern Gaza. The U.S., meanwhile, says it has carried out what Defense Secretary Lloyd Austin calls self-defense strikes on a weapons depot in Syria. U.S. forces have been attacked several times in Syria and Iraq since the last month. Manus.
Coming up, we're going to dig into the central bank talk and China with Klaus Bader, global chief economist at Societe Generale. Danny.
And coming up, more from Bloomberg New Economy Forum. We're going to be hearing from Hillary Clinton, Ken Griffin, and UBS CEO Sergio Armati highlighting the tension between the U.S. and China.
The war cannot afford an escalation, and most likely both countries cannot really afford some things to escalate in terms of economic consequences. I mean, the situation in both countries is fragile, and I guess a geopolitical escalation is not going to be in the interest of both countries.
For the first, call it 18 years at Chipotle, This was, you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Our studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
The minute we start to print dollars to deal with the possibility of default, our economy is in a deep tailspin. So it's a theoretical possibility that we can go there, but the economic consequences would be devastating.
Citadel CEO Ken Griffin speaking at the Bloomberg New Economy Forum. Joining Manis and me now is a man who knows the finer points of a damn squib. It is Klaus Bader, Global Chief Economist at SocGen, who, I guess that's maybe not part of your everyday lingo either. So you join me and the rest of the Americans. Speaking of a damn squib, we had the auction yesterday, and it kind of seemed to go off without a hitch. There weren't the fireworks that maybe you'd expect. We got a 30-year auction today. Is this just going to continue to vex the market, or does it seem like with yesterday's auction, with a lower amount on bid now from the Treasury, that perhaps we can absorb this?
Yeah, I think so. The quarterly refunding announcement last week, of course, was hotly expected and had caused, I think, quite a lot of tensions in the market. And the combination of the Fed and Jay Powell sounding relatively relaxed, and an announcement that was actually not that different from what people expected. But I think after the previous refunding announcement, there was a lot of concern that there'd be a whole lot of coupon issuance. And so the market has relaxed. But, I don't think it's a foregone conclusion that there's going to be all that supply of government debt is going to be smoothly absorbed. We'll see.
Well, we'll see whether we get a light indigestion or not. Klaus, good morning to you. Ken Griffin has taken the New Economy Forum by storm. He's talking about spending. The U.S. is spending like a drunken sailor. The deficit is $33 trillion. And if we keep printing money, we're going to have a few problems. You suggest we will not deal with our issues in 2024 because we're in an election year, and that, the Fed, we're just going to keep printing treasuries to pay the interest bill. Is this extending to pretend? Are we building up to a much bigger debt and bond issue and crisis in the United States of America that simply nobody wants to talk about?
That's, of course, an incredibly difficult question. We just don't know what are the limits to indebtedness. Japan is a perfect example. Japan has absolutely enormously high public sector deficits and debt. And so far, it hasn't really caused a big fallout. It's important that you are issuing in your own currency, and that's why in Europe, for instance, the situation is very different. Mm-hmm. The route through central bank funding is simply not there. Of course, it does mean the more debt you have, the higher the interest rate has to be. I think that's an inescapable conclusion.
Klaus, along with the U.S. government spending like a drunken sailor, to put it in Ken Griffin's words, perhaps the U.S. consumer is also spending maybe like a drunken sailor, maybe a little bit less. But you point out what a contrast Europe is to this. The fact that Europeans are not spending the excess saving from the pandemic. How does that end then in the difference between the end game for the U.S. and the European economy?
Well, I mean, in the U.S., consumers are clearly spending those excess savings. And they're actually, interestingly, over the last few months, they're spending them at a slightly accelerated rate, which I think argues against the idea that it's really only the rich and the super rich who have these excess savings. They do seem to be a bit more broadly distributed, although quite clearly at the very bottom end of the income distribution. And there's probably not much left. Yeah, it's not only the U.S. where these excess savings are being spent. It's a little bit more difficult to judge in Japan, but in Japan, the household savings rate is now also quite clearly below the 2019 level. In Australia, the same thing is also happening. So what's going on in Europe? I'm not sure, but I think it's definitely got something to do with confidence. And I think it might have, the really bear case is that European households have this sense of sharply accelerated inflation, and therefore the feeling that their pension pot and their wealth is worth less in real terms than they previously thought. And so they're going to hold on to those. Now, I'm still hopeful that we're going to get a little bit more spending, but the most recent signs are not positive. In fact, for instance, in Germany and other economies where we already have this third quarter data, the household savings rate actually went up. So excess savings continue to be piled up.
I'm still hoping that it's going to be cheap to live on a Greek beach in retirement. I'm just going to put that thought out there. Not Mykonos. It's a little bit expensive. We have deflation in China. Danny's not going to visit me in Mykonos when I retire. We've got producer prices
down. If you got a free place for me to stay, I will.
I'll always make a place for you to stay somewhere, Danny, on the sofa. Producer prices down for the 13th month. Consumer prices, we are in deflation. I mean, when do we, is this the nadir? That's what I want to try and understand of deflation in China.
I think that it's stretching it to call it deflation. Core inflation is still positive, although it did slip a little bit. It's primarily very weak food prices on a year-on-year basis, and that has everything to do with pork prices, which I'm sure you know are hugely important in China. That price pressures in China are weak and that they're going to remain weak, I think is pretty clear. The demand growth in China is weak, and we still got all the problems in the housing market. I think from an international perspective, the question really is China going to export deflation?
Yeah.
And, on one level you would say, well, great, let's have some of that, because after all, we have a lot of inflation still in Western economies, and central banks want to get it down. I looked at what I think is the key here is, of course, not what Chinese consumer prices are doing. What is key here is what are producer prices doing, and in particular, consumer goods and consumer durables. And when I looked at the evidence a few months ago, I'd say that the risk of China exporting deflation is actually lower than it has been, because the rate of deflation there is less than it has been for a long time. And yet those prices have been going down for years and years.
Klaus, thank you so much. That's Klaus going head-to-head with the headline writers at Bloomberg. It's a stretch for SocGen to call it deflation, not at the house of Bloomberg. Klaus, thank you very much. Klaus Bader there at Societe Generale. Danny, what have we got on commodities? We didn't quite get there. Oil was your favorite this week. I mean, we're in slippage mode, but we're bouncing back ever so slightly this morning.
Yeah, I mean, it is a slight bounce back considering we've fallen about 7% over the past 2 days. It's those demand concerns, Manus, that really has been gripping this market, not necessarily the continued supply cuts from Saudi and from Russia. Iron ore, also an issue of demand, Manus.
Yeah, I mean, I caught up with Bob McNally. I want to show you the spreads, which is the front of the bag. And this is the real backwardation that you want to keep an eye out on. It is fading because it's a washout. Bob McNally at Rapidan says, keep an eye on these. This is telling you that there's a real concern about oversupply from non-OPEC. It's a washout as the war premium fades. Plenty of oil for the market in the very near term, right here on Bloomberg.
So the EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
City, from London, in Sydney, from Washington, in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story. Is there the kind of upside?
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Bloomberg New Economy Forum is in full swing in Singapore. Francine Lacroix sat down with the UBS CEO, Sergio Motti.
The first 90, 100 days was at 90% on the integration. Right now it's coming down, but it's still very substantial. I don't expect this to change dramatically from kind of 2/3, 1/3. But it's true that what I need to pay attention, and we need to pay attention, that clients, we spoke about the macroeconomic conditions, everything that goes on. We need to continue to stay close to clients. We need to run the business. There is a day-to-day business, there is an integration business, and as we speak, we also see a lot of changes affecting our economies and our the way we operate as a bank. Digitalization, technology, artificial intelligence is changing the way we're going to work in the next 3 to 5 years. So the real challenge right now for us is not to be stuck into integrating the bank using the model we had in the last 5 years or we have today, but rather also thinking how it's going to be in 3 to 5 years' time. So I can't, and all of us in the bank cannot afford to be distracted from the clients and from a forward-looking aspect of what we need to do.
Now, the UBS CEO, Sergio Motti, there went on, Manus, to say that the demand for their AT1 bonds in a sale yesterday signaled confidence. How's this for confidence, Manus? Folks who were burned by the Credit Suisse AT1 bond wipeout bought into UBS's product yesterday.
Well, they didn't just buy them, Danny, did they? They literally battered down the doors of Bahnhofstrasse. I mean, he offered, $3.5 billion. Bid-to-cover ratio was around $36 billion for that. So that's a vote for Motti and what the Hollywood cast, as his previous CFO said.
Yep, not too bad. All right, coming up, we're going to hear from Ken Griffin from the same forum.
have been so used to the fact that every time there's a problem, central banks come and ease. This has been the kind of playbook, throughout my career, before that, after I left. Now we're in a very different environment. Central banks actually have to create a recession, in essence, to get back to price stability. So it's a complete reversal of the modus operandi, in a sense, of central banks as they've known it for the last several decades. So that's why it's not so much that they're getting something wrong. They've now acknowledged that there is this trade-off, these costs to pay, but it's a completely different way of thinking about central banks, and it's a different role. Another way to put it is they have to be unpopular now in order to get inflation back down, where it used to be you could count on them each time to rescue you, to stabilize the system, to bring support. And that has shifted. And I think many people, even in the markets, have not quite understood, in my mind, how much we are now in a different regime compared to the last 4 decades, effectively.
So it's what, almost an easing bias in the markets? How would you describe it?
In the U.S., yes. And I think it's this idea, this almost pre-programmed idea, when there is a problem, i.e. potential recession, central banks will come and ease.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. Chair Jerome Powell calls for courage and humility in Fed forecast methods. Treasury yields fall to the lowest in more than a month as traders await an auction and more comments from Powell. Disney rises after an earnings beat. Theme parks deliver the biggest boost to profits as streaming losses narrow and subscribers grew. And Ken Griffin warns the world is facing structural changes. We're going to hear more from the Bloomberg New Economy Forum in Singapore throughout this hour. It was a bond rally yesterday. Over the past 24 hours, it eases, and we are back above 4.5%. It is still a somewhat narrow range that we've been trading around, this 4.5%. It's the one that JP Morgan says that the quants of the world, the CTAs, are going to come and continue to bite if we remain around here. So we're up 4 basis points this morning. Will an auction of 30-year notes and more comments from Powell come to crash the party? Crude, that is up almost 1% after falling 7% for the past 7 days. Manus and I just walked you through the backwardation that has gone poof in this market. So those supply concerns not as apparent as they once were. And finally, Bitcoin, Manus, because I know it is your favorite asset, above 36,000. Everyone is very excited that an ETF might be finally coming to market.
Yeah, just with full disclosure, I don't have any exposure to Bitcoin that I knowingly have. And when that ETF arrives, I mean, it could be buy the rumor, sell the fact, but I want to give you some facts on the stock market. I mean, nobody got indigestion on the bond auction last night. Let's see how the 30-year paper goes down. Does it go down like honey today? We're on for the 8th consecutive cash market gain in stocks. The VIX has dropped, the longest slide since October 2015. And if you get green on this screen by the close of business today, you're going to be up for the 9th day in a row. That is going to be the longest rally in equity since 2004. As I said to you, there's going to be a $40 billion bond auction last night. In terms of the NASDAQ, flat at the moment. You've got UBS out with a note saying, you know what, we prefer China tech relative to the Magnificent Seven, because Chinese tech is trading at a 30% discount. They are more cautious on the Magnificent Seven. We've got a little bit of green in the Eurostoxx 50. Now, the reason I've chosen this stock, which is Iden, it's a payment system in Europe. They're guiding, they're saying growth targets are starting to soothe their investor concerns, and they're here to talk to some of their US investors. The stock is up 32%. Let's see how this bond auction goes tonight. Danny.
Manus, I mean, the bond auction, we were just speaking with Klaus Bader about it, about this idea it's not going anywhere because we're about to enter an election year. And he says it's unlikely that any of the deficit issues are going to be worked out in that kind of political environment.
Yeah, well, apparently we are like drunken sailors in this country when it comes to the deficit, according to Ken Griffin, who sat down at the New Economy Forum. So more of that a little bit later on. To geopolitics, Danny, and higher rates, they're dominating the concerns of the business leaders at the New Economy Forum in Singapore. Speaking of which, Ken Griffin spoke exclusively with Bloomberg, with the editorial director, our very own Eric Schatzker.
Regretfully, the peace dividend is clearly at the end of the road. No matter what one may dream to be reality is there's two wars in the world right here, right now, one of which is in Europe. So there's no doubt that the NATO countries are going to have to increase defense budgets over the years ahead. That's going to come at a point in time where governments around the world are already struggling with the sizes of their deficits. And then when it comes to globalization, I mean, we're in Singapore. We are at one of the global nexus in the world of trade, of finance. Many of us in this room have been tremendous beneficiaries of globalization. And it hasn't been great for everybody, to be clear. But for the world as a whole, it's pulled 1 billion people out of poverty. But now we're talking about deglobalization. We're talking about re-architecting supply chains. And some of this is rooted in the behavior that we saw in the pandemic. We saw countries hoarding personal safety equipment. We saw the tension around the distribution of vaccines around the world. Countries are much more sensitive to what do we want to have created domestically so that we're not reliant upon global trade. And then take that into the general geopolitical trends right here, right now. The war in the Ukraine has resulted in Europe losing access to natural gas from Russia for all intents and purposes. Europe struggling to deal with how does it maintain its economy having lost its cheap source of energy. So there's many trends at play right now that are pushing us towards deglobalization. And with that is almost certainly a trend towards higher baseline inflation.
And the implications of higher inflation might be obvious to some, but I think we'd all like to hear it from Ken Griffin.
Well, it depends on where this baseline effect lands. If we're looking at a 2 or 3% baseline effect, in some sense, the central bank will have a much easier job in the United States. The struggle over the last 20 years has actually been to hit a 2% target. And there's a variety of reasons that you want a low level of background inflation. It helps to lubricate the wheels of commerce. And that number the Fed has committed to as being 2%, they're going to fight pretty hard to keep that as the target for a litany of good reasons. But it also means that we're likely to see higher real rates, and we're likely to see higher nominal rates, and that will have a real implication on the cost of funding our enormous deficit. The U.S. has $33 trillion of debt outstanding. We didn't plan for an era with higher nominal and higher real rates when we went on the spending spree that created a $33 trillion deficit.
Citadel founder Ken Griffin speaking at the Bloomberg New Economy Forum. Man, is one refrain when folks hear that kind of thing, like Ken Griffin is talking about, this deficit spending, this continued issuance, all of that, one thing that we've commonly heard from guests is that the consequence for the Fed will be no more QT, that they can't possibly continue to sell bonds in an era where there's just indigestion in the bond market for these auctions coming out.
Well, you have this classic clash between the Treasury and the Fed. The Treasury have got an interest bill to pay. They've got to, pay up to $1 trillion in terms of interest payments, and this is where the real clash is going to come. He says that we're spending in the U.S. like a drunken sailor with $33 trillion of a deficit, and I think therein lies the point, which is higher inflation for decades and higher rates, and that is what this market absolutely will not buy. It just won't take that on. It's got nearly 100 basis points of cuts for next year here.
Yeah. Is there going to have to be it's this irony of the higher for longer narrative lasted, 2 weeks? The Fed finally, it took 9 months to convince everyone, and then we only believed it for about 2 weeks. All right, Manus, coming up, we're going to talk about the debate yesterday. Republican candidates attacked the current frontrunner, Donald Trump, in Miami. But did they do enough to distinguish themselves from the former president? We discuss that next on Bloomberg.
of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Sports and money, they've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Bloomberg.
Everybody wants to talk about President Trump.
He owes it to you to be on this stage and explain why he should get another chance.
Anybody who's going to be spending the next year and a half of their life focusing on keeping themselves out of jail and courtrooms cannot lead this party or this country.
I don't think he's the right president now.
2024 is our final battle. Stand with me in the fight. We will finish the job that we started.
Republican candidates taking jabs at former President Donald Trump at the third Republican debate hosted by NBC. Trump skipped the debate, and as you could see just there, he held his own rally in Miami. Joining us now from Washington is Zach Cohen of Bloomberg Government. Zach, earlier in some of these campaigns during the primary, there had been this hesitancy to really, go guns a-blazing after Donald Trump. Is that all done now? Did candidates really press into him?
Certainly there were moments where candidates tried to make the case that they were, one, best positioned to be the alternative to Donald Trump in this Republican primary. As New Jersey Governor Chris Christie pointed out, he faces a number of criminal indictments that he'll be facing over the next couple of months. But there were also efforts to try to show Republican primary voters that they were best prepared to replace Donald Trump as the frontrunner for the Republican Party. You had Florida Governor Ron DeSantis saying it's time to move on. Former UN Ambassador Nikki Haley saying he was a good president for the time when he was elected in 2016, but needs to find somebody else for the 2024 nomination. This comes up right on the heels of a number of Republican losses in places like Ohio, Kentucky, Virginia, in Tuesday's elections, where Republicans lost a string of battles, especially when it came to abortion rights. And Republicans, I think Vivek Ramaswamy, the entrepreneur on the stage, pointed out Republicans are a party of losers right now. And so they're looking for a change of direction. And a lot of them are looking to place the blame on Donald Trump as the leader of the party at this juncture.
Zach, how do they do on global foreign policy? I look at some of the comments, they were just stunning. Ramaswamy calling Nikki Haley a Dick Cheney in 3-inch heels, and she called him scum. So obviously the intellectual debate about foreign policy was high.
Certainly that was, I think, one of the most substantive differences, honestly, between the candidates. You had Haley and Christie on one side arguing in favor of a robust defense of Ukraine in its attempt to rebut the Russian invasion that's been going on for over a year now. And then you had Vivek Ramaswamy, Florida Governor Ron DeSantis, trying to make the case that, no, that money is better spent on things like securing the southern border with Mexico. and Senator Tim Scott, the fifth candidate on the debate stage, who's voted for a number of these packages, making the case that, well, we probably need to audit where the funds are going first before we consider more aid. And so that was probably the most substantive policy difference between these candidates, who will determine whether Ukraine gets additional aid if, in fact, Republicans win full control of not just the White House, but of Congress.
When it comes to the billionaire class, there's been more, shall we say, uncertainty over who they will be backing this time around. Ken Griffin, in speaking to Bloomberg during the Bloomberg New Economy Forum, said he had high hopes for Nikki Haley. He said, I think this could be a galvanizing moment for her campaign. After this debate, is there a sign that, again, that billionaire class of Republican donors might start to coalesce around her?
I mean, this is really the last chance for any candidate who wants to be the alternative to Donald Trump to really make the case. The Iowa caucuses are coming up in January. There might be one more debate in December, but hasn't actually been scheduled yet. And so this was the opportunity for these five candidates to make the case to voters and to donors that they should stay in this race, and that those donors should keep on the money spigot that they'll need, not just to compete in Iowa, but beyond that in New Hampshire, South Carolina, Super Tuesday states in March. And that's really where they'll need some deep pockets in order to stay on TV and in order to stay in the race through the Republican nomination convention.
How much do we take away from the Democrats taking a win in Ohio, Kentucky, and Virginia? I mean, we are still 1 year out from this election. A lot can change. The lineup can change. We don't know who is going to win the mandate on the Republican side. Is it too early to hang your hat on those kind of victories?
Well, certainly the biggest difference will be there will be a Republican, or there'll be a presidential campaign at the top of the ticket in 2024. President Joe Biden will be seeking a second term, and there's a wide gulf between the performance of Democrats in some of these states, both blue, red, and purple, on Tuesday, with Biden's own approval ratings, which tend to be fairly lackluster. And so how that informs the debate and how that changes turnout among voters certainly will be different from what we saw on Tuesday. But the key takeaway for both Democrats and Republicans is, especially on abortion rights, after the fall of the Roe v. Wade Supreme Court decision that assured a federal right to an abortion, that issue continues to galvanize not just Democrats, but swing voters as well, who are looking to keep that on the forefront of voters' minds going into next year's election.
Right. Zach, we started this out by mentioning that there's some counter-programming from former President Donald Trump in Miami with a rally. There have been reports of how he has reacted during his various court cases. Has there been any clear movement around voter appetite towards him? There was that poll over the weekend that caught a lot of folks' attention of him versus Biden. What sort of messages have come out, again, from the different reports of him in court and from his most recent rallies?
Well, I think we've seen Trump continues to be the front runner for the Republican nomination after he was obviously elected in 2016, but then lost in 2020. Some of that might be attributable to Biden's own flagging approval ratings, especially among independent voters, an increasingly small but persuadable bloc. And then Democrats are also concerned about keeping up turnout among young voters or voters of color, typically a huge voting bloc for them all the way up and down the ticket, but may have been concerned or less impressed with how the Biden administration has delivered the last couple of years. And so some of this might be a comparison between Trump, who's the front runner for the Republican nomination, despite these multiple indictments against him in multiple jurisdictions. But they certainly haven't weakened his position in the Republican primary field. In fact, in some cases, it's actually strengthened it, as Republicans have made the case that this is some sort of weaponization of the federal government, of the FBI, of the DOJ against the front runner for the Republican nomination.
Zach, thank you very much. Zach Cohen on the very latest, the third Republican candidates debate for president right here on Bloomberg. Well, concerns over the situation in the Middle East also dominating the discussions and the Bloomberg New Economy Forum in Singapore. John Micklethwaite, our Bloomberg editor-in-chief, spoke exclusively with the former U.S. Secretary of State, Hillary Clinton.
A ceasefire, if it were possible, which frankly I don't think is possible. I don't think Israel is interested in a ceasefire at this point, but they are perhaps willing to have what we do call humanitarian pauses for the purpose of both getting aid in to try to assist the civilians in Gaza, but also getting the more than 240 hostages out. These hostages are not just Israeli. One of the biggest groups of hostages are workers from Thailand who are working on farms in Israel. So there is a global dimension to the hostages that a pause could perhaps inspire some willingness on the part of Hamas to let the hostages go. But a ceasefire that would freeze the situation at this point is not something that is going to, really undermine Hamas's capacity, especially with 200 miles of tunnels that they have constructed over the last decade, to launch yet another attack on Israel. And that would be intolerable. And I think it would be intolerable for, any nation represented at the forum.
Well, there seem to be kind of two big theories going on about this war. One is that this is the end of the peace process. The other, which you champion, the other is that this is, if nothing else, this will prompt finally some move towards a two-state solution. Which side of that do you fit on?
Well, I actually try to fit on both. And I'll tell you, John, I think it's important to have some aspiration, some goal that we can look toward. Many of us, my husband particularly, worked very hard on trying to get a two-state solution. And it, frankly, in retrospect, is heartbreaking that Yasser Arafat walked away from the deal that Bill had brokered between Israel and the Palestinian Authority back in 2000. There could have been a Palestinian state on up to 97% of the land from the 1948 division that would have been in existence for 23 years now. So I think you have to create the environment in which there is a chance to revitalize the peace process and a potential for a two-state solution. Hamas is not interested in a two-state solution. They are dedicated to the destruction of Israel. That is in their charter. If you've been watching lots of different outlets over the last month, that is what the leaders of Hamas say. They want to destroy Israel. So Hamas is not a partner for any kind of peace or two-state solution, but the Palestinian Authority might one time again be. New leadership in Gaza might again be. So we have to get to a point where that's possible.
Very quickly, do you think that Benjamin Netanyahu is a partner for a two-state solution?
I don't think there's any evidence of that. I think the Israeli people will have to decide about his leadership. I think there will be investigations about what led up to and what happened on October the 7th. But I think there needs to be new leadership of the Israelis and the Palestinians in order to have any chance at some kind of peace deal, especially a two-state solution.
Former U.S. Secretary of State Hillary Clinton there speaking exclusively to John Micklethwaite, Bloomberg editor-in-chief at the New Economy Forum in Singapore. Now, coming up, we're going to take a look at some of the market-moving events to watch throughout the day. But first, Manus, you have a market that's already moved a whole heck of a lot over the past 4 days.
It has indeed. Have a look at 30-year paper. We've got, 24 billion of 30-year bonds coming down the pike in the auction tonight. The 40 billion of 10s went fine last night. This is the drop in 30-year bonds. You're also looking at one of the biggest moves lower in mortgage rates in a year yesterday, down by 25 basis points. So you are seeing mortgage applications rise. Everything's priced off the 30-year for the housing market. We keep an eye on that tonight. It dropped the most in a year, 25 bips to 7.61%. Auction eyes are lit on Bloomberg.
let's go inside the boardroom. Let's suppose you win a proxy fight and/or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present them with the plan.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
This is Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Let's get you set up for your trading day with a look at what's ahead. We're going to get U.S. initial jobless claims, 8:30 a.m. Eastern time, plus $24 billion of 30-year Treasury bonds go on sale. Then we're going to hear from President Lagarde at 12:30 p.m. Eastern, followed by Chair Powell speaking at the IMF conference at 2 p.m. And then some more consumer earnings. We're going to hear from Wynn Resorts after the U.S. market closed. But until then, Manus, it's still the whole new world that we're living in with Disney, that big old earnings beat.
You're desperately hoping that I'll sing A Whole New World, aren't you? No.
I am.
No.
You're a beautiful singer, Manus. The world needs to hear it.
Let me assure you, it was 25 years ago and I sang on CNBC. We won't be doing that in our Bloomberg career. But
Is that why you're at Bloomberg now?
It's a whole host of reasons. It's a whole new world at Bloomberg. Excuse the pun. Bob Iger, you're tempting me, aren't you? A whole new world. There you go. That's as close as you'll get to a song out of me.
That made my day.
That made your day. That's all that we're here for. The entire crew here at 2:30 in the morning to make your day. Bob Iger is going, I mean, he's cutting hard and he's cutting deep. And the market likes it, 3.7%. It was up a little bit higher earlier. Theme parks. Have you been to a Disney theme park, Danny?
Not in a long time. I'm going to be honest. There's this thing, I don't know if you've seen this in America, Manus, of Disney adults who love Disney, will have their honeymoon there. Power to them. It's not me. I probably won't go until I have a child to bring to Disney.
You've had enough of this whole wedding thing. What else is on our slate today? I know we're obsessed about this 30-year auction, which is probably more important, but ARM, I mean, they just weren't full of joy, were they?
No, I mean, it's the concern about smartphones. They say they're an AI company. That's the future. But for now, Manus, the focus is on the iPhones. And for us, the focus is on Jay Powell and $24 billion of 30-year notes coming to auction. This is Bloomberg.
Venture capital it's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
The stock market rallied because the bond market rallied, and that's just not typical.
Growth keeps surprising on the upside, and that might continue.
Markets are a little bit more volatile right now than the underlying economy is.
It's going to be slower, but I don't think we're about to go into global recession.
It always looks like a soft landing just before a recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
8-day winning streak on the S&P 500, live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market positive by 0.2% on S&P 500 futures. TK, if we make it day 9, that's the longest winning streak going back some 2 decades on the S&P.
Short's really humbled. There's no other way to put it, and it's the way we're doing this. It's a persistent bid, including this morning. Futures up 10, all of that happening in the last 20 minutes. Brahma walked on the set. We got green on the screen. But the basic idea here is it's a lot of micro stories wrapped around one thing, starving for growth. Microsoft off October 1-ish, up 17%, just as one example, $2.7 trillion market cap.
Record high. Meta up by 165%. TK Nvidia up by 218% year to date. You want some happy talk? Look to the outlook from Goldman Sachs and Jan Hatzius. I'll give you some happy talk. The hard part is over. We continue to see only limited recession risk. Lisa, more disinflation is in store over the next year. That's the view from Goldman going into 24.
A lot of people would agree that more disinflation is in store. The flip side is, what accompanies it? And the idea that the worst is over. The worst of what? Are we seeing economic softness? And this really is the question, especially given what we heard from Michael Daugherty yesterday and the ticking higher in unemployment rates that really isn't seen unless there's a recession ahead.
Just as importantly, Nick Benenbrook at Wells Fargo talking about 2.4% global growth, which is, by any definition, a recession. I think Arian lectured me on that years ago. And the answer is, you're right. You get a slowdown off of a deflation or disinflation. But this news overnight of Chinese disinflation and outright price decline, that redounds across the world. And what does it mean? People starving to find growth.
So as you know, pork prices, Tom, at the epicenter of that. And as you know, there was a hope for a demand boom that didn't materialize in China. 2 things happened yesterday afternoon. One in the bond market, the other in the commodity market. A break of 450 on a 10-year yesterday, yields lower.
Yeah.
That's the bond market. In the commodity market, a break of 80. Tom, a break of 80 on Brent. How quickly, how soon before we're sitting around this table and we're talking about not support from lower yields, but fear because lower yields mean something about the outlook
That's
for
going
growth.
over to what Lisa said about economic slowdown. I mean, let's be clear here. The bond market, I was riveted at 1 p.m. yesterday over that successful 10-year auction. We'll have a full report from Bramo here. It'll take the entire 7 o'clock hour on the damn auction. But the answer is, yeah, there's a growth fear, but an economic growth fear, but in the meantime, you get a search for growth, and that's where you see Microsoft and the rest of them bid.
I do think, though, and I am deeply humbled, this is the year of narrative roulette. And we're talking about a slowdown in demand that was behind possibly some of the oil price decline. And then the head of the energy ministry over in Saudi Arabia came out and said that demand is not weak. People are pretending it's weak. It's all a ploy. This in a press conference just a couple hours ago.
Well, blinking it will change again anyway. Wait a week. Equity futures on the S&P 500 positive by 0.2% this morning. Let's whip through the price action together. In a bond market, yields bouncing back by about 3 basis points, 4, 52, 55. Similar story in the commodity market. Crude higher here, Lisa, by 0.7%, $75 and about 90 cents.
It's been such a quiet week for economic data. Today we actually get initial jobless claims. It'll actually matter that much more simply because we've gotten no other data of note this week. 8:30 a.m. it comes out, and it comes at a time. Michael Daugherty yesterday of MKM Roth pointing out that unemployment has risen by 0.5 percentage point over the past 6 months or so. That has never happened, he said, without a recession following on. And that, I think, is important to watch. 1 p.m., U.S. Treasury selling $24 billion of 30-year notes. This follows the, yes, successful, Tom, auction yesterday, but it wasn't screamingly successful. The more interesting thing was it just wasn't a failure, and that's all the market needed to rally.
No, that's dead on, and that it was not a failure, and that's the fear. And John, that is the gloom crew that's out there. Life goes on, even with $1 trillion of annual interest payment.
You can say it looking at Bramo.
I can't say
the gloom clue's out there.
It's okay.
It's like, folks, this is like in the movie My Favorite Year with Peter O'Toole. The guy in the green room, when they're planning the shows, can't talk to the idiot, so I can't talk to Bramo, so I'm like, John, tell her she's wrong.
At 2 p.m., Fed Chair Jay
Lisa,
Powell.
no, carry on, please.
Fed Chair Jay Powell is going to be speaking at an IMF panel that also includes IMF's Gita Gopinath, Harvard's Ken Rogoff, as well as the governor of the Bank of Israel. Should be interesting given some of the recent developments, and moderated by the IMF's chief economist. Does he say anything? Yesterday he did not, as expected. Today, does he come out and give a framework of how he's looking at the economy and what the threshold is to cut rates, because that is currently a big point of the discussion.
I'm going to front run the chairman quickly here because we've got such a wonderful guest, Ken Rogoff. I want to hear what Ken Rogoff says about the new debt and deficit dynamics.
You'd rather listen
nation.
to Rogoff than Powell today.
That's true.
That is so Tom Keene. That is the most
rather
Tom
listen
Keene
to my
thing
good friend Ken
ever.
Rogoff.
Chris Marangi joins us around the table, Co-Chief Investment Officer at Gabelli Funds. Chris, good morning to you.
Great to be here.
You're a man who's participated in this rally over the last week, so let's talk about it. I mentioned Meta, massive year-to-date gain up by 165% or so. Are you still in that name? Are you staying with that stock?
Yeah, we are in that name. You know, they live off of advertising, and Tom mentioned scarce growth. They're a company that's growing. Most of the other media industry, we're seeing sleepy top lines. It's harder to grow. And so, yeah, that's getting a premium. It's not that expensive. They'll earn $20 next year. The outlook is good. They've got a lot of costs yet to cut.
It's amazing to see what they've been able to achieve. Top-line growth, even with those deep, deep cuts. You said there's more cost to cut. What kind of numbers are you thinking about?
Well, listen, I think they've got a lot of cushion. You know, on the last call, they signaled that they are going to still continue to invest in the metaverse and AI and other initiatives, and we'll see that. But again, growing top line gives you a lot of room to do that.
Mario Gabelli invented all of this, and it was wrapped around securities analysis. You've got all those manila folders behind your desk folded up with each stock that you follow, just like old school. What do you do with what you own, Berkshire Hathaway, and their massive cash buildup, or the massive cash buildup across all of corporate America? Warren Buffett has a size of cash that's just surreal. How do you buy that? How do you own that?
Well, you know, Warren Buffett is probably the greatest capital allocator of all time. And if I'm going to give cash to somebody, he's somebody I'd want to give it to. He's got a great team. They own a great set of businesses with a lot of reinvestment opportunities. So, you know, that's why we're comfortable there.
What's the catalyst here? I mean, you look at Apple. So what was Ive saying? Apple's going to buy somebody, ESPN, or whatever. I mean, you guys have been doing this since time began. What is the new thing about all that cash that people like Warren Buffett holds?
Well, it's the opportunity, maybe not today, but maybe in a few years, if we enter recession, market structurally changes, and he's left there. with a pile of cash, and it's harder for PE guys and others to borrow. One thing that's gotten really clear to me is it's very difficult to know what to price in some of these tech names, in some of these entertainment names. Is it going to be the story of just solid revenues like with Meta, or is it going to be the hope, the promise of new technologies? Jeff Katzenberg, the former Disney chair, said overnight, he was talking about the potential cost reduction of the use of artificial intelligence to create animated films by a factor of 10. How do you price that out for some of these entertainment names? It's certainly very difficult to do, and it's one of the reasons that you've got NVIDIA and others and Meta and Google reaching such highs is because nobody else knows what to invest in to take advantage of this AI boom. So it's gonna. I think AI is gonna have a much bigger impact on the back of the office. That is things like production, customer service, and others than some on the customer-facing front. No one knows what else to invest in order to take advantage of this. No, I mean, I want to delve into that, right? I mean, is this basically a default? We know it's going to be big. Everyone tells us it's big. Buy NVIDIA, buy Apple. I mean, is that essentially what we're looking at? I think it's as simple as that in many cases, yeah. Okay, so then at what point do you know it's bubble versus something real? When do you need to start seeing the revenues? Well, yeah, I mean, that's always the question. You never know when the bubble's going to pop. And I don't want to call AI a bubble necessarily, but it clearly has been important to the performance of the Mag 7.
Let's pick out a name that reported yesterday evening, the Walt Disney Company. The cut's taking place there. I believe that Bob Iger and the Walt Disney Company announcing an additional $2 billion of cuts. What do you make of the strategy right now over at Disney?
So Bob on the call talked about going from fix to build, and I think that's kind of the headline. He stabilized the business and is now focused on reinvesting in the parks and in the studio, which has probably been neglected for the last few years. So
profit growth for the park business is just phenomenal. Looking at the numbers yesterday,
the parks business continues to be phenomenal around the world, both for Disney and for Comcast. And the question is, how cyclical is it? Because historically, this has been a cyclical business, and when the consumer runs out of money, are they going to stop going to the park? Because it's an expensive, obviously, proposition.
The public doesn't care what Mario Gabelli and you invented. They don't care about individual stock analysis. I'm going to buy an index fund. You two guys, your thoughts on the preponderance of index funds?
Yeah, this is a great question. And obviously, the flows have been to passive. Somebody needs to do price discovery, and somebody needs to be rewarded for doing price discovery. And price discovery can be very painful. And that's what we do. And, in an imaginary world where it was all passive and there was massive inefficiency, that wouldn't work. So at some point, it leads to opportunity.
War story, folks. One day I'm with Mario. Years and years ago, I was a huge shareholder of the Gabelli Equity Trust. Full disclosure, I don't own any of it now. But the answer is you had Cadbury Schweppes. And like 2 days later, boom, it was taken out. I'm looking for a great zombie roll-up. Are we going to see takeouts in banking, beleaguered banking? Are we going to see takeouts in media after the train wreck known as Warner Brothers Digital yesterday? When's the Gabelli roll-up happen?
There's going to be consolidation in media for sure, especially amongst the streaming names. Don't know when that happens. It's probably over the next few years. Obviously, you have an FTC, which has been allergic to consolidation. That, of course, may change, but it's inevitable. At this point, when you take a look at the suite of particularly entertainment names, just sort of piggybacking off of the Disney earnings yesterday, who do you think are going to be the ultimate winners? Well, you think about who has a seat at the table for streaming, and clearly it's Disney, it's YouTube, which is soon going to be probably the largest video distributor in the country, and Warner Brothers Discovery certainly has a case to be made there. What happens to Paramount and AMC and Peacock, remains to be seen. ESPN, we were talking yesterday about Apple potentially taking it out. Yesterday, Bob Iger saying that it would be a standalone streaming business by 2025 and talking about that as one of the main pillars of the company. What do you expect to happen there? Yeah, so sports, talking about sports rights. Sports is tribal. The ratings have held up quite well. So ESPN has actually done better than the general entertainment linear business. So it is going to be a direct-to-consumer business. How it gets priced and how big that market is a question, but it's going to happen and they'll find their way there.
Are you impressed with Liberty?
Liberty Media has been a holding for many, many years, much like Berkshire Hathaway. John Malone is the Warren Buffett of media. They're having their big meeting today. We like a lot of the businesses within Liberty Media, including Formula One, but especially the Braves, which is one of our larger holdings.
What are the questions you've got for him today?
Well, I think, there's a question about what happens in cable as we see wireless convergence. How do the cable companies compete in that world where so much is wireless? That's a big one. And, what's the future of media? How does streaming fit in with the linear business?
And the future of Formula One, TK? Hearing a lot of stories about reduced ticket prices, reduced hotel prices in Vegas going into next weekend.
Well, they got some challenges. Let's sell, John, our conversations here over the next 2-3 days. We've got 2 heavyweights lined up.
Two
in
fantastic
celebration
conversations.
Of Las Vegas.
Christian Horner, Red Bull, tomorrow. We'll catch up with Mr. Horner after their big victory this season again. And then Mr. Toto Wolff.
You know, what's great about
Mercedes Racing next Monday.
What's great about this, you know, you think about horse racing where you got to fix a horse for the next season. How does Red Bull improve on their car over the season? Folks, I asked one question. I mean, I'm so dumb on this. It's like one question, Bramo and I give it over to John. But this is great, back-to-back Red Bull and Mercedes.
Well, you've got a very different question on Monday. How do you close the gap with Red Bull? How do they close the gap?
Sir Lewis happy would be a small
I agree,
matter.
especially with George Russell coming up as well. Chris, this was fun. Fantastic to catch up with you, sir. Thank you. Chris Morangi there of Gabelli Funds on the latest on his investments, Tom, participating in this massive rally we've seen over the last week on the S&P and beyond.
I got a huge comfort in this, folks. And I know everybody's out there buying index funds, but the answer is this is what Mario and Chris invented, actually looking at companies and then having the courage to hold them until value is discovered. That's what he's done with Berkshire over the years.
We'll continue this conversation in the next hour. Julian Emmanuel of Evercore ISI. We'll catch up with him in about 50 minutes' time. If you are just joining us, yields are higher by 3 basis points, 452.74. Equities advance following the longest winning streak in 2 years. Can we extend it on the S&P 500? From New York this morning, good morning.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
I don't think, Israel is interested in a ceasefire at this point. Hamas is not interested in a two-state solution. They are dedicated to the destruction of Israel. I think there needs to be new leadership of the Israelis and the Palestinians in order to have any chance at some kind of peace deal, especially a two-state solution.
That was the former U.S. Secretary of State Hillary Clinton speaking with Bloomberg's editor-in-chief John Micklethwaite from the Bloomberg New Economy Forum. More on that in just a moment. Welcome to the program this morning. 8-day winning streak on the S&P 500 could well become 9 if we make it day 9. It's the longest daily winning streak going back to 2004 on the S&P 500. Futures inching just a little bit higher by 0.1%. Came down through some interesting levels yesterday in the bond market. The 10-year, a break of 450 into the 440s briefly. Only a few weeks ago, we were talking about 5% through 5%, right the way back down 50 basis points or so. Higher this morning by 3 basis points. Bit of a reversal in the crude market as well. 75.74 on crude this morning. Higher here, Tom, by 0.5%. After breaking into the 80s yesterday on Brent crude, we're at $80 flat right now, positive by 0.2%. 0.6%.
Hugely important. Let's remember that's a global price, clearly affected far more by Suez Canal and Eastern Mediterranean geopolitics. John, what I would emphasize with the rally that we've had is the real yield. We've lost scope and scale. If you'd asked me 6 months ago about a real yield at 2.18%, I'd go, world's going to change. Now I'm going from 2.50 down to 2.18, and the world changes for the better. Small business gets some breathing room here.
Can we leave behind the fears of a couple of weeks ago? Can we move on that quickly?
I just think that, does it really matter for businesses if on paper something goes up 0.5%, comes down 0.5% before you have to change your financing goals? I mean, at a certain point, it's moving so fast, people are paralyzed and wait to see what happens tomorrow.
I felt the same way, Grandma, when I saw mortgage costs.
Exactly.
The price of mortgage coming down from 8 to 7.
I mean, great.
Like, yeah, sure, get straight on the phone. Let's buy that.
Exactly.
No, I'm not sure that's how it works, Lisa. I'm not sure that's how it works, Tom, in a real world.
No, yeah, we're just simply going to have to see. John, what's more important, November 25, Alabama, Auburn, or December 6, the 4th GOP debate at the University of Alabama?
I mean, I'll be watching Auburn.
Auburn.
Many other people will be as well.
To get us to the next GOP debate, Jennifer Flitton briefs, head of U.S. Government Affairs at Invesco. Jennifer, what will you look for December 6th at the next GOP debate?
Oh, well, I think I'd be looking to see who's going to be on that stage. Each step, each next debate has more restrictive thresholds. And so yesterday was interesting because you had only 5 folks on the stage, and they really had more time to get at each other, but to also get their message out. So I'll be interested to see who's on that stage come December.
Civics 101, are they all running for vice president?
It certainly feels that way, especially as we look at these polls and we see no one really taking any of that Trump margin out. He's 30 plus, depending on the state. And even in Iowa and New Hampshire, where voters are very focused, they take their responsibilities as the first caucus, the first primary in the nation, very seriously. They're very focused on this primary. And Trump really is just continuing to reign in those states. Jennifer, do Republicans have a messaging problem around abortion? Well, I think this week was a reality check for Republicans in Ohio, in Virginia, in Kentucky. They're going to have to try to find some way to approach this going into 2024 that mitigates some of the problems they're having with referendum. Because if you look at the Democratic playbook going into 2024, you're going to see abortion playing a major role, especially in those 18 plus districts for the House members where Republicans are currently sitting in those seats, but also in those battleground states. I'm going to be looking to see if those referenda are put on the ballot. Does it matter, though? I mean, at a certain point, there's a question around the local or the sort of state elections versus the national ones, saying that they're very different in nature. Are you actually saying that this time is different and social issues could make the difference at a time where there are all these other issues, including economic ones? I think voters are motivated with loss aversion. They don't want something taken away from them. And that's what we're seeing playing out in the abortion debate, right? And so if that is on the ballot, it's going to play a role until this issue is sort of settled law. And I don't think we're close to that yet. We're still debating this on the state level, and there are some who want to still debate it on a national level.
Jennifer, help our international audience with the evolution of Nikki Haley. It's a remarkable story. I mean, you go back to her childhood in South Carolina, absolutely remarkable story. How is the former governor evolving debate to debate?
So Nikki Haley, former governor of South Carolina, was a popular Republican figure back then. She played a role in the Trump administration as the UN ambassador and really took on an international role that she did quite well. And Republicans were very pleased with her. And she's been able to play into sort of the more moderate Republican, but also appeals to the conservative Republican, the Trump Republican. She hasn't offended in any way. And I think that her abilities on the debate stage
are so strong that she is attracting a number of folks who maybe even are on the Trump train, but are interested in other candidates. And so I think her evolution is going to continue, and it'll be interesting going into next year what role she could play.
I mean, 11 years ago in our John Micklethwaite interviewing the former Secretary of State in the last 24 hours, Haley's given a lot of credit for Hillary Clinton saying, we can do this. Are Republicans going to embrace her? Do you envision her wandering out on that stage at the GOP convention and being embraced by our modern Republican Party?
Yeah, I mean, the Republican Party is shifting, especially as it relates to international issues. I mean, we aren't necessarily the same, we're not seeing the same party as that we did 20 years ago. But I think it's an important voice, it's an important message, and it's a big umbrella, the Republican Party, as is the Democratic Party. And so there are a lot of voices there, and I certainly see her playing a major role in the convention.
When it comes to the economy, there was some discussion around how to get stable prices as well as spending. There seemed to be no appetite last night to cut some of the entitlements that are really sucking up a lot of the budget. There was a discussion, though, about the Federal Reserve. This is what Ron DeSantis had to say about the Fed. The Fed should focus on stable prices. They are not an economic central planner for the American people. So what is your sort of sense of what the economic policy here really is?
Well, I think there are a number of issues with talking about entitlements and entitlement cuts. Those are issues that you have a number of senators, bipartisan groups of senators who want to talk about, who are in a safer sort of position to start having those conversations. But I don't expect that to play a major role on the Republican debate stage. But that's a little unfortunate, right? Because these are the biggest fiscal issues facing our nation. As much as we're talking about some of the discretionary issues as we enter into the government funding fight for next week, the real game is entitlement and entitlement spending, because that makes up the large portion of where our trajectory of our debt, remains, right? So I think there will be a greater discussion, but it's probably going to be a fight in the general.
Jennifer, appreciate your perspective, the update from you and the team. Jennifer Flitten there of Invesco, looking out to the general next year. Let's go through the Goldman note together and picture this. Let's imagine Goldman's right for 2024. What does that mean for the politics? If the hard part, Tom, is over, if more disinflation is really in store over the next year, and if they're right, and they see only limited recession risk, and we continue to get an expansion through 2024.
Cardinal rule. Elections are not won or lost on fiscal policy. Maybe this will be different. By the time you get out to 2024, we're going to have the stimulus, which everybody, including an important essay in the FT today, everyone agrees the stimulus, whatever sets of it, was hugely successful. But you got to pay for it. And that could be the debate into next year.
We don't have much time, but there's a lot of people that don't think it was hugely successful, and the Fed's still fighting it.
You look at 8% lift in real U.S. GDP, no other country's
I thought you were about to say 8% inflation.
No, 8% real GDP lift off the pandemic.
Bill Lee of the Milken Institute on all of this coming up next from New York. This is Bloomberg.
for the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
Looking to extend the longest stretch of gains in 2 years on the S&P 500 to potentially make it day 9 on the S&P, 8-day winning streak so far. If it becomes day 9, Tom, as you indicated in our little conversation this morning before we came on air.
It's a little conversation.
It was a small one.
I get it at
the longest winning streak since 2004, potentially.
558. We have a little conversation. Russell 5000, whatever it is, RTYA, up 0.4% this morning. That's what Chris Marenghi was talking about. Even the small caps were out searching for growth this morning.
From the peak of the summer to the recent bottom in the last month or so, 18% move lower on the small caps. They've had a tough time. They're rebounded slowly. I want to pick up on something you said the last 5 minutes or so. I think you're right. The outperformance we've seen in the US economy relative to, say, Europe has been phenomenal.
Yeah.
And you can point to the fiscal package that has been delivered over the last 2-3 years. Without a doubt, the price we've had to pay for that arguably is higher inflation. The problem this administration has got, Tom, is how do they communicate to the electorate over the next 12 months that that was the right thing to do, that the growth we've got is a consequence of that, and the inflation that came about as a consequence was a price worth paying. That's going to be a difficult thing. That's going to be a difficult needle to thread.
That would force it over then from inflation, and let's say we get resilience, price leveling, even disinflation, it finds itself over on the balance sheet, the nation's balance sheet, and our public balance sheet. Ken Rogoff and Reinhardt were brilliant on this in their classic book. But the answer is there's the debt of the pandemic. There's the deficit of those are two different things. How are we going to fix that? And that's the presidential debate that America doesn't want to hear.
Which is why Bramo's going to be talking about auctions through the rest of this year.
Please, there's another one today,
30-year debt coming a little bit later, Bramo, right?
$24 billion coming, and this will be a test. Is it welcomed with the same kind of rally if it just doesn't fail? I mean, is that the threshold here that we're looking at?
Let's talk about the bond market, 2-year, 10-year, 30-year. 10-year yesterday, a break of 450. We've come down from north of 5% to south of 450 in just a few weeks. Right now, north of 450, 453. Yields up 3 or 4 basis points. On a 2-year, up a single basis point, 494.24. Interesting break in the commodity market yesterday as well to see Brent crude back below 80. Brent and WTI look a little something like this. Brent very briefly there in the 79.99 range of things. That's where we are currently, Bramo. And there's WTI crude deep into the 70s, 75, 72.
The fact that the energy minister of Saudi Arabia pushed back against the declines and said that this was not driven by fundamentals or weak demand points out to me, watch this space. Does this mean they are not happy with prices where they are? I mean, to me, that was really notable, especially given some of the concerns people had over geopolitical risk. Well, their concern maybe is people are underappreciating how much demand there's out there.
So why were they cutting prices to Europe? Why did Aramco cut prices to Europe?
Well, right.
If demand is just a figment of our imagination.
You could argue that this is self-serving, trying to push up the prices. On the flip side, you have to wonder whether they're going to counteract this with further supply cuts, or at least prolong them.
Brent crude 80, up by 0.6% this morning. Under surveillance this morning, Israel intensifying ground operations as its army pushes deeper into Hamas strongholds in the north of Gaza. The Israeli military saying around 50,000 Palestinians fled to the south with limited pauses in the offensive to allow people to escape. Meanwhile, US forces firing upon a weapons depot in Syria used by Iran. At least Defense Secretary Lloyd Austin calling it a, quote, self-defense strike for attacks in Iraq and in Syria.
What I find most interesting about this is the imminency of some sort of expansion of this conflict seems to have been taken off the table in markets, right? There seems to be this complacency that this is going to be something that keeps going on, but that isn't necessarily likely to escalate because it hasn't so far. So are there still red lines? Are there things that we should be watching, especially